Looks like I might be on. Mic check. 3, 2, 1. Yee-haw. All right, let's see what we got going on here. Friday, baby. And I placed an MBI trade too, so. Oh. Hold on, I gotta change that. Shoot. Okay, I gotta do that. Hold on 1 second here. All right, let's go. Let's get this on the road. What's going on, baby? Oh, but boy, I gotta do some. How's everybody doing out there? Oh, dude, Trader Podcast. I gotta talk to you, man. I see him out there. I gotta talk to Trader Podcast. All right, what's going on out there, everybody? We're gonna make this quick. So just heads up, I just placed an MBI trade, although I'm not completely happy with it. But I did place my holiday trade this morning. I got 1229, 420, 440 C for call spreads. For debit call spreads. So I got those for the 29th of December, but we got to talk about them because there's likely going to be I wanted to name it like modified MBI trade, but we'll look at it today. Anyways, I'm in this trade and I need you to know it because oftentimes I get asked after the fact, I didn't know that you placed that trade or whatever, so I just want you to know that I'm going to post it on Twitter here in just a minute, but Twitter wants me to update a phone number and stuff like that, so give me just one quick second. Anyways, we're sitting there right now, and we had a little bit of bloodletting to the downside, just checking these previous lows down below here, and we're going to go over some earnings for next week as well. We still haven't had a cross confirming any kind of a squeeze. At this point, we'll talk about a squeeze, though, and where it should go, what you're looking for rejection points into next week. We have a lot to actually go over, so it's going to be more of a data-ish dump kind of day, setting up calendars for next week. Now, I tried to chew on over yesterday. Hold on 1 second. I got something I got to do. Hold on 1 quick second here. I got some crap I got to do in the background. I got some stuff I got to do. How's everybody doing, though? Happy Friday. This has been a long week for me. I feel very worn out. I was at a football game last night with... Dude, where is my... Dude, what is going on with YouTube today? Hold on a second here. I don't know what is going on with YouTube here. Fucks. You know, sometimes YouTube, it's like, it can be like that one thing that breaks the camel's back. And you're like, hold on here. It's like that one thing where you're just like, you know, my video is processing. What is this? What is going on here? All right. This is driving me batty. Oh, boy. Thumbnail. Here's my thumbnail. Okay, so that should be good. Go back. Yes, save changes. Dude, seriously. It's so archaic. Give me 1 quick second here. So the title of the video today, I forgot to put the thumbnail up, I guess, or it didn't upload or something like that, is second quarterly MBI trade. It's market breadth indicator trade. Now, I'm not as we'll look at it at some point this morning. I'm not as confident in this trade, and I'm not as confident in how long it'll stay on. But we're gonna save that. we're going to take a look at it. I'm in 1229, 420, and 440 debit call spreads. They cost me $714 this morning. So give me one quick second, and we'll talk about that trade because it needs to be managed. Give me a second here. Not only does it need to be managed, but next week we've got a bunch of data dumping that, man, it's like this weird thing. Well, it's like this time thing. If normally I would say, wait until we get the Fed rate decision, place that trade. That's what responsible Jim should be doing here. And that's like the not financial advice. Part of it is, hold on here, is that I should wait until the rate decision from the Fed. But I think we actually squeeze up possibly into that Fed meeting. And we'll talk about like why I'm placing the trade today and not waiting. Even if it rolls back into that rate decision, I'm going to still capture the theta burn. So, yeah, there's risk there, but not as much as it might seem like. And I don't want to catch like a squeeze up into that event, or not be able to capture that squeeze up into that event. So I want some exposure to it. I did not go as much as I would normally go in this trade. Normally, I'm in for multiple tens of thousands of dollars, and I'm not in for that much this time as well. So my risk is a little bit less than normal. I already made this trade for this quarter, and I'm done with it. So we'll look at it. We'll talk about it and see what you guys think on it. But I am in that. This is my holiday trade. So I'm in my holiday trade as of today. Hold on here. Give me one quick second. And I'm kind of pissed at myself because I didn't buy Meta. So I'm stinky this morning about Meta. And then I got an alert on Meta. As a matter of fact, had a buy order. I had a stink bid on Meta, removed it. Then we went down below 83, and it would have triggered. But I did leave an alert on. I didn't buy it, and I'm kind of pissy at myself now that I didn't buy Meta down there. That video that I watched on Meta, was a game changer for me, at least. Now, I don't know if it's fake or if it's going to take 30, 40 years to do that stuff, but I was not a fan at all on Meta's. Dude, what's going on with YouTube? I'm having major YouTube issues this morning. Oh, YouTube. I thought it was me, but it's not me. It is YouTube. Yeah, I'm having major YouTube issues this morning. God, it's like never ending YouTube crap. So I think I'm okay now. I think I'm back again. I think I'm back to normal again. Copy, close. And so anyways, give me one quick second. I got some Twitter stuff to do. FinTwit's asking me for some stuff. Give me just one quick second. Now, let's go back to the beginning. Like, so last night I went and talked to my last night I went and spoke with my daughter's coach, and we both felt pretty worn out. And like, I just got back into town last weekend. We're going straight into, dude, what is going on? Huh? what is going on? Like, fucking Twitter's. Oh, dude, we got a lot to talk about today. I just looked at some Twitter. Hey, baby, hold on a second. Appreciate it. Hang tight 1 second here, guys. 2. Oh, yeah. Okay. Dude, just like, if you change your phone number, it's like, if you change your phone number, it starts to come back to haunt you and everything that you, all right, we're good. All right, let's get back to what we're doing. Meta, we're going to do Tesla today, and we're going to do Qs. All right. Weird. All right. Morning, everybody. I was like talking to my coach my kid's coach last night, and I was like, I'm worn out. I just like nonstop run, do this, do that, do this, do that for the school season. And then like juggling with we have like a nanny that's part-time, not time enough. And so we're doing a lot for our kids right now. And it's like juggle this, dentist, doctor, sick, practice, school meeting. And then we've got like we did a vacation, or wife and kids went on their own vacation last weekend. They didn't get back till Tuesday. Then we've got Halloween coming up this weekend, and it's like starts like today. It's like Friday, Saturday, Sunday, Monday, and Tuesday. So I don't know, what's that? Like it's like 5-day holiday. We are squeezing up right now. We have a cross coming up just right now. I am long here. I did put on a trade this morning. If you're just joining us, I put on my NBI trade for the second time this quarter, and not in the same size. Normally, I do about $30,000 in this trade, sometimes more, depending on how greedy I am. I'm not greedy right now, so I've only got about 13.5 something on this trade. But this is my holiday trade. This is my Santa rally, holiday rally, Festivus rally, whatever you want to call it. You're not religious, not spiritual. I'm very secular as a person, so you can call it whatever you want in front of me. I don't care what you call it, but I am on that trade for the quarter. Now, that trade that I went into this morning, I do have some concerns with it. I do have some concerns with this trade, and we have to talk about them. The biggest thing, or the biggest thing that I see that's like the danger to this trade is some of the data that we have releasing next week and the Fed rate decision to some extent. Nothing material from him. I did have a long conversation last night with a friend about that rate decision. We should talk about that today because there seems to be some maybe more information from the GDP numbers that were released this week, and what Jerome had said in the last rate meeting. So we'll talk about that this morning as well. So the risk to this trade right now that I can see is twofold. So the first major risk to this trade, this is SPOOS. The first major risk to this trade is going to be this cross right here. And it's fairly dangerous. Number one, into next week. Let's just get rid of that. Into next week, I'm going to at least expect for this rate decision that we could at minimum get pinned in here. So I'm on this holiday trade, right? And there's likely going to be some kind of a pinning action and that doom and gloom. So even if I think this is Wednesday here. I could have my dates wrong in here, but this is still the general gist. Would be that we could squeeze up into that Tuesday or Wednesday of next week, but then have that bullshit down here where we go down, and that's the actual buy for the holiday trade. Now, I'm not as concerned with it being down here. It's a good place for me to buy it. Even if we do have that pull down from the panic from the Fed rate decision. But if you were like, hey, I want to wait for that, that makes sense to me. On a secondary point though here, I don't like this holiday trade below anyways. So I'm like, well, if we do squeeze that before we get to Wednesday, I'll just take the trade off the table in here and capture all this stuff. And then if we get the more blood into the rate decision, I'll place a third MBI trade up here. So, or down here. So I'm trying to I'm trying to get greedy here. So anyways, I am on this trade. It's 440, 420. I do want you to realize that I will take this trade off before we get to this daily trigger next week. If we do get to it next week, if we end up going up here, and if price ends up going up before Wednesday of next week, I will take the money and run off that trade, and then set on my hands for the rate decision for the third. It would be the third quarterly trade on MBI. And there's some concerns. We're gonna look at what those concerns are. The dangers here. Why is it dangerous to put this trade on? Price will matter when you take it off. Now, the last one for this quarter I took off too. It was cranking, so I was making pretty good money on it. I got a good premium kick on it. So, hold on a second here. So for next week, let's start with that. For next week, I want you to know something that this cross up here is extremely bearish. Okay, talked about this cross yesterday. I think Joe Donut posted it for you on Twitter yesterday morning as well. But I want you to realize that this cross is pretty bad. Now, it's bearish. It's not doom and gloom yet, so don't get too crazy. Don't be like saying, oh my God, we're going to crash and all that other stuff. You still need to confirm this cross to the downside. It's not going to be something where it blasts down to the depths of hell. You have your 1987 crash. You are going to have to confront that cross and its meaning. Confirm that that's the direction that we're headed. And if that's the case, we'll know it. If we get that cross, or not the cross, but if we get the confirmation, I'm going to end up turning very bearish on that move to the downside. This would be a seal the deal for the bulls for the year if there is any kind of rejection up here. So this could be my last. Technically, this could be my last bull trade of the year, if that ends up being the case. If we end up rejecting this cross above. So that is where the risk is. The risk to you is roughly here, right? There is, if you're a bear trying to short the market and you're like, fuck that, Cap, I'm super bearish, and we're going to crash this market down. This is the place. This yellow daily trigger is the major place for you to take shorts. You can actually see this one up here. You can see this one up here. You can actually see the bear plane that was formed, the alert that was given way up here. You can actually see it right there. That's written right in bear plane. And you'll see the next bear plane once it creates itself to give a trigger for a reversal to the downside, if that is what is going to happen. So we'll look for it. If we see that reversal, we see that bear plane or whatever, we'll look for it and see if it happens again. But otherwise, long here, long with holiday trade in mind. And I am fascinated to see what does happen next week. On the economic calendar, for next week. We talked about it yesterday. We're going to talk about it again this morning so that you're all aware of it into next week. We've got nothing scheduled for Monday. We have at 8:30 a.m. on Tuesday, on 8:30 a.m., we have Employment Cost Index. 9 o'clock, Case Shiller, Chicago Business Barometer, Consumer Confidence. None of those are going to matter. None of those reports are going to actually matter. You should see today, tomorrow, today, Monday, or at least the Monday session. Tuesday session should not be focused on any of the news that you see coming out. The key dates will be ADP on Wednesday, S&P 500 U.S. manufacturing PMI. Job openings going to be key. ADP unemployment and job openings should be the two glaring, to me, economic news next week until we get the Fed rate decision. That's on Wednesday, same day, at 2 and 2:30 p.m. And the reason why I'm saying that those are the two most important, you might be asking, hey, why is ISM manufacturing not important? Why is manufacturing PMI not important? And the reason being is the rest of the sauce, and the Fed knows this. You hear the Fed talk about this, right? You'll hear the Fed talk about wage growth spiral. You'll hear the Fed talk about robust jobs, right? They'll talk about GDP, and GDP is going to be wrapped into that PMI, that manufacturing PMI, and all that kind of stuff. But really, the secret sauce here is unemployment and jobs. There's a Goldilocks zone in unemployment and jobs right now. That's going to be the key driver that we're going to be looking at, as well as these GDP numbers we just got, and the answer to that. We have to talk about that today as well for Jerome next week, because the GDP numbers, even if they're revised, are telling a completely different story than everything that we're seeing. I mean, that story is absolutely different. So anyways, and we're going to talk about that today. So we've got, again, Wednesday, Fed Chair Powell, 2:30 p.m., 2 p.m. and 2:30 p.m. And then we've got some more numbers coming out that are important as well. We've got Thursday, initial jobless claims. That's another important one. And then Friday, U.S. non-farm payrolls, U.S. unemployment rate are going to be some very important ones as well. So, and that volatility lasts into Wednesday. It starts Wednesday, then Thursday, then Friday, are all very important numbers next week that you need to be looking at, and for what the Fed Chair Powell says. So, and let's talk about that, because I had well, first of all, Laura, we talked about how tired everything is. Into this Fed Jerome Powell meeting, you hear things like light recession, double dip. I heard something yesterday. I was talking to some friend. He said, "What about double dipping?" And I said, "Well, it would be triple dipping." And he said, "What do you mean?" And I said, "Well, we had our first dip in 2022, so you're looking for your second dip." And he said to me, "What do you mean by that?" I said, "Let's talk about GDP." I was like, "Let's talk about timing the macroeconomic landscape against the market and the timing of the marketplace." So if we've got like that double dipper where you get the first roll and the second roll, do you expect that third roll? The third roll is much less common. And so where we are in price on the stock market, until that GDP number came out, and then listening to Jerome Powell, my initial thought was, well, they're going to try to front run a bottom to the market into 2024. And it seems like it's early this year, right? They're doing it earlier than even spring or fall of 2024. And this conversation we're having, I was like, I'm looking at these GDP numbers, and they can fudge them, they can do whatever they want. So I'm looking at inflation, and I'm looking at employments, unemployments, and we're just discussing this conversation about uh, is he actually done raising rates? Now, the idea here is that he only has one, maybe at most two left, and then hold them into December of 2024. Inflation looks like it can be fudged into the 2% that he's looking for, and unemployment looks like it can go to 5 to 6% in December of 2024. But that GDP number disagrees with all of that, right? That GDP number seems to say that everything's great out there. Not great, but what it's actually saying is that producers aren't bringing their pricing down. Retailers aren't bringing their pricing down. And you're actually getting paid more. It's saying that, too. It's saying that you're working more or have a second or third job or you're getting paid more because GDP is telling you that these people have raised their prices and that they're raking it hand over fist. Now, I don't know how you're getting that money, where you got that money or whatever. There's something else here, too, that we were discussing in this conversation yesterday, but that ties into this, and that is what we're fed from news reporting. People always want to define a narrative. For whatever reason, there's always a narrative, right? But that narrative is oftentimes not accurate. If any of you have had any experience with the news on the inside, you know that a lot of it is truly fake. That's been my experience. My experience in the military and then my experience as a business owner as well, believe it or not. So it really is. It's inaccurate. If any of you have ever been the subject of a news story, you're like, wow, they got all that shit wrong. Or it's kind of right, but not really exactly what's real. So my take on that is something that we've discussed in the show before, which is, Mary the landscaper, we talk about her, right? And that there's a material fundamental change in the U.S. And we were told that people during COVID got a bunch of free money and they pissed it all away. And we had examples of that, right? You've got someone that gets arrested for fraud. You get somebody that gets arrested driving around, I don't know, Lamborghini or something that shouldn't have one. Any of that kind of stuff. They're trying to get money for fake people or stuff like that, like kind of like dead people with dead Social Security numbers. But there's never a conversation about the person that was giving that money and what they did with that money responsibly. No one wants that story. No one wants the story of an old person who has a medical emergency and they go bankrupt, right? That's not like no one cares about like Joe Blow works 20, 30 years at his company, did everything he was supposed to do, and then, gainfully employed, went to college, 2.5 kids, you name it, and then they have a massive medical debt and they just disappear, right? No one cares because they're older, and they're not, no one, people care about like a 30-year-old or a 25-year-old is doing, right? What's the hottest, newest, coolest thing? And the same thing I think applies to some extent with these GDP numbers from COVID that we're still not over here. There's some resilience in the economy, and I don't know how you beat that resilience. I don't know how you beat that resilience. How do you beat that out of the economy? And I was talking to this friend last night, and I said, I remember when COVID happened and there was money being given out. I had a lot of employees. I think I had 30 employees that had worked for me prior to COVID. And in one shape or another, these guys were all unemployed and wanted or needed, couldn't get jobs, couldn't work during COVID, had to apply for some form of PPP or whatever that shit was, unemployment, all kinds of other stuff. I remember having conversations with a lot of these guys, and I was like, this is the only time you should ever expect in your life to get a government handout. What are you going to do with it? Are you going to piss it away or not? I remember having these conversations with these guys, and most of them said they wouldn't. Most of them said that they were going to try to change their lives for the better or do something important like, I don't know, start a construction company or, I don't know, buy a plow truck, whatever it was each one of these guys was going to do. The fascinating part of that is this looks like GDP with the rate increases that we've had, the GDP looks like some people may have bettered their lives. You might not have. Your experience might be different, but we don't have destruction going on out there, right? And you've got the Fed chair saying higher for longer, maybe one more rate hike. GDP disagrees with that. And the resilience of our economy is disagreeing with that. In general, it's like recession. What recession? If you go out anywhere right now, places are packed. People are doing things. There isn't mass unemployment. People are working. They're struggling to pay their bills. They don't like paying their bills, but they're out there spending the money. GDP says that they are. So the question then becomes, Jerome only has a few choices, right? And let's hook back around to that timing of the market. You get that first roll down, then you get the second roll down. How do you get that second roll down if our economy is that resilient right now? And if that is the actual second roll, right, that quote-unquote crash that we're going to have, well, hold on a second here. I might get some problems going on here. Give me one quick second. I don't know what's going on. Give me one quick second here. I didn't notice that. So the important part of this conversation is that the important part of this conversation is that you've got a resilient economy right now. It's resilient. You got a Fed saying we're going to do higher for longer until at least December 2024, and maybe one more rate hike, and then pause and wait and see. But our economy doesn't look like it needs that, does it? My friend and I last night were talking, and I was like, man, we could be needing like 10 basis points, 15 basis points. And he asked why so high, and I said, if people are this resilient, we're gonna hold where we are for 3 years, 4 years, 5 years? Do we just bounce out of this like no recession at all? And inflation, is it ever going to come back down? So he likely is not done hiking even one or two more times. That's a base case with these GDP numbers. So he may have been in his last rate meeting. That conversation might have been to introduce ramping of rate increases further down the road. That's a problem. It's not a problem for the market, but it is a problem, right? Higher rates, not just one or two, but possibly even more rate increases down the road to try to beat this economy down. That's option number one. Option number two for him and for the Fed is to declare victory and fudge the numbers, believe it or not, on inflation and say, hey, we accomplished our goal of beating inflation, and yet inflation just rages in the background. Choice number three would be mass bailouts and crash the economy, crash the debt cycle, crash the equities market, and all that kind of stuff. But that triple dipper is the one that's bothering me. The cycle of the economic cycle and the stock market. When you're looking at this from the GDP side of things, it doesn't make sense for the stock market to crash right now. If he has more work to do, and more than he's even saying, that we go higher for longer than even 2024 and higher than longer than even one or two more rate hikes, that would mean that we're not going to crash, that it's going to take another year, 2, 3, 4 years to possibly make that happen, to get that second roll. Now, some of you out there might be thinking, well, there's this other option where we have that crash right now, and then we go even further down later on. The idea here would be, if these banks are trying to front run the Fed sometime next year, which analysts are all in agreement on, that's what they're trying to do. So let's say you take the stock market down from now into springtime, right? Say you take it down to 3,000 from now into next year. And we're still not done raising rates. We're still not done destroying the economy. That makes me scratch my head. That doesn't make sense to me, that the stock market would go to 3,000 and then you'd still be dealing with destruction of the economy down at 3,000. I don't see like 1,600 or 2,400 for our stock market. Personally, so not personally, but just technically, I don't see it either, unless there's some fraud of some kind, some major fraud that we don't know about. Well, there is fraud, but that's the fucking Fed. So I'm fascinated to see what this rate decision meeting is going to be. That last rate decision meeting that he had was, to me, bizarre. But I'm have a second thoughts about it, that maybe it was to introduce even more rate increases rather than another 25 BPS or 50 BPS in this next wave of, I don't know, higher for longer increases into 2024. So I'm fascinated to see what this rate increase decision is going to be this upcoming week with Fed Chair Powell. And if that's the case, that they're going to raise for longer, if they're going to actually truly raise through 2024 and likely beyond, is this the second roll? I'm going to go with no. And I think he has more work to do. It was weird. We were discussing this last night, and another topic that we said was that you not trick, but you give people the false hope that we're going to cut rates so that they begin to sell their homes and loosen up that real estate market so it can come down. And we're not seeing that right now, right? You're just not seeing that in the housing market. You're not seeing the destruction that you want to see. So I'm fascinated to see what these unemployment numbers are, what the jobs numbers are this week as well, these upcoming numbers that we're going to get, if we continue the march higher in unemployment or not. I'm going to think that unemployment's going to flatten a little bit, and employment's going to flatten a little bit with these GDP numbers. Credit bubble? Nah. You know, there's credit bubble. I've heard that. That argument was brought up in our conversation last night as well. As long as people are paying their bills, I don't care. I don't care if they're working 2 jobs, 3 jobs. And then there's some wage spiral stuff that they're hiding. They don't want to discuss some of this wage spiral stuff. If people make more money to pay their debt, I'm fine with that. I mean, it's not good for you and I. It's not good. We discussed that last night too. So if I'm making $100, let's say I'm poor, and I make $100 a week, and I can't pay my bills, and then I get a wage increase to $150. Now I can pay my bills. Or let's say I was poor, right? I was making $100, and I just barely paid my bills, and so now cost of services and goods goes up to $150. You give me a raise, now I'm making $150, and I can now pay my bills, but I'm still poor, right? They just need you to pay your bills if you're poor. If you can just pay your bills, we can move on, right? It's kind of when your bills become $150 and you're not getting paid the $150 where we start to have internal problems in our economy. And that's not happening right now. It's just not happening. You can see it. I can see it everywhere. It's not, there's no panic out there from like Bob on Main Street. So the idea here would be The idea here would be, if you really want destruction right now, right? Under normal circumstances, you'd get it. But we aren't in normal circumstances. We've got an entire country of people that were given, not a free ride or anything, but, some substantial chance to make some changes in their lives. And I don't think that's talked about often enough or put under the microscope enough. Because normally we should have some destruction here. We don't have it. And he talked about this in one of his rate decisions. He talked about how he was trying to get the COVID cycle and the business cycle back on track together. He mentioned that, I think, is not this last rate increase decision, but as the decision before that, he discussed it. And then he felt like he had finished the job. He was like, we did it. He's like, we think we've done what we needed to do to deal with the COVID cycle, the COVID business cycle, but I don't think that he has. Those GDP numbers are in the face of that. Now, hang tight one second. Hang tight one second. So it just flies in the face of what he's saying, right? When you see those GDP numbers where they are, it casts like I can't get it off my mind. I can't get it off my mind that we haven't had any destruction yet. You've got average years of people living in their homes as well. First-time home buyers, I think it's 4 to 7 years. Second-time home buyers, I think it's 8 to 12 years. And then you've got, and that pretty much is the cycle for you raising your children. And you have some extensions in that. So you get out of college, you buy your first house, you have a child. Within that 4 to 8 years, you're selling your first home. You get your second home, that's your 20 years, roughly about your 20 years. And then you're trying to downsize as you hit your 50s and 60s. And your kids are all going off to do their adult things that children do. And we also talked about Bob on Main Street, Mary the landscaper, last night, and how I don't know if it's better informed, but the age of the internet has provided people with more access to information that they deem trustworthy than in previous generations. In this time period, people know that, like, hey, I own a home, I should be selling it, or I'm aging out of my home, whether it's I want to buy my forever home, my McMansion or whatever, or my kids are leaving to go to college, and I want to downsize from what I thought was my forever home in that McMansion. And these people are saying, I'm not selling. I've got this 2-3% mortgage. I'm not going to sell. I'm gonna wait this out, right? And they haven't given up the reins yet. These not just boomers, like true boomers, like 70-year-olds, mid to late 60-year-olds, but even younger people, 60-year-olds, 50-year-olds. That is not. They're not selling, are they? They're like, fuck it, I'll wait it out. And I don't think we had people doing that in 2000 or 2007, 8. 2000, 2001, and then 2007, 2007 and 8. Today, these people are like, I ain't moving, I'm staying right what I'm doing. So I don't know if they're better informed, they're better off. If they had time with their family to sit at home and love on each other and make these big plans. Maybe people were starting businesses at home during COVID, or they were going to college again, or they're improving their lives in one way or another while they were at home during COVID, and the impacts of that on our business cycles in the United States. So I'm fascinated by it. It was this long conversation we had last night, and I think it was we talked about it was a 50-minute conversation where we discussed the state of the economy. And what really needs to happen to get that destruction? What would the Fed actually need to do? And how possible is that? I don't think that it's possible. I'll be honest with you. I don't think, from my perspective, I think corporations realize this. You can see it in some of the renegotiations of wages. You can see it in the gouging that's taking place in inflationary concern. From an inflationary perspective, hey, we're not going to drop our prices. This is our only chance. We only get this chance every 10 to 20 years to raise prices. And there's some background acceptance of inflation is going to go higher. So they could do the mission accomplished fake out, and we just keep moving forward. And you end up paying people more money, and your cost of goods and services becomes embedded or ingrained into our economy. Now, even if that stuff is ingrained in our economy, it still doesn't solve the issue of demand destruction. It doesn't solve the issue of cyclically how to weed out all of these poor companies, bad companies, that natural capitalist system where we weed out bad debts. We haven't done that yet, have we? You get what I'm saying? And we need to weed out that bad debt. We haven't done it. And there might not be as much bad debt as you think. I think we might think that there's a ton of bad debt, but it might not be as bad as we think it is. So to achieve that, how do you do that? I don't think one more rate hike does it. Not with these GDP numbers. It doesn't look like that last. And GDP means everything. You guys know that, right? It's like the crown. GDP. I mean, these are inflation matters. Inflation matters. Unemployment matters. Jobs matter. But truly, the health of our economy is GDP, and it's strong. It's resilient. There's no other way to look at those GDP numbers other than everything is fine. And I was out last night again. I'm like, everywhere I go, it's like everybody's happy. Everybody's working. Everybody's happy. Everybody's doing their thing. I didn't see any of my interactions with people last night. Nobody was complaining. People were having a grand old time. It was just like another fun day out and about doing their stuff. So I'm interested to see what you guys think about this because, man, like I was on the side of maybe that was more of an introduction in the last rate increase of a way more hawkish Fed coming down the pike. Yeah, you know what? I just got an offer to credit card for 0%. I just got a 0% offer. Credit cards are offering 30, but they're also offering 0 too. I just got offered one. I just got an offer last week on less than 30. I think the narrative here is not jiving with. I think the narrative is not jiving with the numbers. So these numbers are either fudged. If they're fudged, they're being fudged for an acceptance of higher pay and higher inflation. A normalization of new costs and a normalization of higher wages over time. Not today, but over the next 4 to 5 years. Normalization of higher wages. If they're not being fudged, then I don't see how 25 BPS is going to do it. I don't see that. I don't see how that does it. Maybe it does. And that was another thing that we discussed last night. The last part of that conversation was, do they say the higher for longer right now and say, hey, look, we're beating inflation. Look at it. You can see inflation's coming down. We had a big jump this previous reading, but it's normal to have a jump while inflation is normal to have a couple jumps as inflation is coming down. And do they only need this narrative into the election? Because the base or the base voters for both the Democrats and the Republicans are going to be old people, not young people. Old people are the voters in this country, whether you like that or not. I don't like it, but if you're old, you typically vote. And as long as they sound like they're fighting and beating inflation, those voters are going to come out for those candidates. So I don't think you're going to see those candidates harping. They're going to attempt to say, especially the ones that are in power, I don't care what party they are. But in this election cycle, you'll see people saying, look, we're fighting. Anyone that's in office is going to say, look, we're fighting inflation. Although I don't know that that really is the case. Nor I don't think that you do either, right? I don't think that you think that they're actually beating inflation in any way, shape, or form. So I want to be clear on something about working class. Just so you guys know, I'm a little bit older guy. Your working class should never really. They should feel the pain, but not in a significant way. We don't have a lot of middle class anymore. We have a lot of like what would be considered wealthy and poor, like working class. You really you're looking for the pain in people that are. You're looking for pain in. You're looking for people that are about 50 to 65 years old. That are at the end of their working careers, and they start to get laid off, and they're overextended with bad debt, and they begin to declare bankruptcy in masses and droves. And you're looking for people that are older losing their wealth. So you've got the 50 to 65-year-old class of people. Then you're looking for the 65-year-olds and older to begin to have to distribute their wealth. And we're not seeing that quite right now. And that election matters because that person that's heading into that person that's like 65 and older, they vote. And so there's going to be a lie told to them that we're fighting inflation, even if they want to take their money. So they got to get through that election cycle. Those people do vote, and they're going to care. They're going to vote based on, hey, is inflation and wage spiral going to price me out? Am I going to go to the poorhouse because I can't keep up with my retirements that I planned out my entire life? I wasn't expecting this to happen, right? So their vote matters. So poor people, I wouldn't be looking towards poor people. So if you have a job like you're a mechanic or something, or you're like a blue collar worker of some kind, or you're a low level white collar worker, I don't expect you to be squeezed. You're already squeezed. You're taking on second jobs, third jobs, hustles, whatever it is that you're doing out there. I'm looking for that middle class hero who has too much debt in the form of like $150,000 pickup trucks, and they're overpaid. Not overpaid, but it's the wrong thing to say overpaid, but they've matured in their salaried career, and a cheaper worker can be put in their place with less experience. They're coming to the end of their working life, that kind of stuff. You're looking for those people to get the pain. Their kids should be in their teenage years, somewhere in there, like 10 to 20 years old. And those people that begin to lose their jobs or not be offered employment and stuff like that. No, this is not wisdom. This is from data. All of it data driven. We go over this data in the stream all the time. So I'm interested. This upcoming week, we've got a rate decision on Wednesday. And this prior rate decision that we had, he changed his tune. And he changed the narrative from the higher for longer and data dependent to, hey, you've got one, maybe two more rate increases, and we're going to hold until at least December 2024. That's a change in his thesis. That's a change in his status on rate increases. And these past GDP numbers are pointing towards not only one more rate increase and higher for the next year. They're pointing towards multiple rate increases and likely higher than even 2024 based on GDP. And I'm fascinated to see what the employment numbers are this week. Absolutely. What are you saying here? I'm always concerned that size and difference isn't based in things being okay, but more being blissfully unaware of how things seem to be falling apart. I think they do realize, Matt, that things are falling apart by wage increases. 23 states in the United States have raised the minimum wage this year alone. And there are more states planning on raising minimum wage next year. We haven't had that in some time. And so there's an undercurrent. So Matt Quella just said, I'm always concerned that society's indifference isn't based on things being okay, but more being blissfully unaware of how things seem to be falling apart. You know, things could seem like they're falling apart for you. Corporations will attempt to keep you on life support, but only life support, right? We're not talking about improving your life or any of that kind of stuff, or giving you a living wage, just enough so that you can get by. And that seems to be happening. Seems to be happening out there right now. Yeah, Stretching Walls is saying, I think Powell's going to try to clean that up a bit this go around. No charts or other visuals this time. I'm wondering if he was opening the door to even more rate increases next year. I know that sounds crazy, but our economy is very resilient right now. Do I think we squeeze end of day? I'm in calls here, so I'm in call spreads right now. I bought call spreads this morning on a low. And that's all I'm in right now. I'm in no other trade. Do I think we squeeze up into the close? I don't know. I think we shouldn't. You've killed so many positions this week on the long side that they'll likely pin it, and you won't see us rise up until next week. Into when we should squeeze up into Wednesday, into that rate decision, and then we've got Saturday, Sunday, Monday, Tuesday, Wednesday before that rate decision, but then the dealers aren't going to want to pay you on any bad decisions that you made this week and all of the reports this week. So do I think that we'll squeeze today? No, but I think that it's positioning today for a squeeze into next week. Good question, by the way. What else we got here? We're going to talk about earnings calendar for next week. Anyways, let me know your thoughts on Jerome Powell, rate increases. I want you to think about not your situation. I don't know what your situation is out there. I want you to look at the macro landscape out there and try to piece together. Now, the economy is not the stock market in any way, shape, or form. But we can look towards the economy and where it's at and where the stock market should be or be headed towards. And there's something not jiving here. So that's what my question is. It doesn't wrap itself up as neatly as I want it to. So prior to that GDP number, it was wrapping itself up kind of neatly. And that GDP number is now a thorn in the side of me for that wrapping itself up. That's my point here. Do you guys understand that? That prior to that GDP number, everything seemed like it was on track there, and then that GDP number is they fudge it, and they know the number before, and they know what it's going to mean. And so it looks like that GDP number is saying more work ahead. And not just one rate increase. It's saying more rate increases. I'm missing some of this stuff. Missing some of your comments here. Hey, good morning, Shikim, Princess King. How you doing? Yeah, I don't know. Binky might be a good person to. So Binky's in the chat right now, and he might be a good person to ask about this. because Binky is coming into the end of his working career, right? I think you are. I'm not positive, but um, you know, there's those GDP numbers, man. They are, if you're an older person, you've got to be wondering. I'm fascinated to ask an older person what their thoughts are on what their vote is going to go towards. Because if you're an older voter, you're going to vote towards protecting your retirement. And inflation is the thing that scares old people. It doesn't scare me yet. It's going to scare me when I'm older. A better way to explain this would be, there's a better way to explain this. So, oh, by the way, if you want to trade this market up today, we can. Hold on a second here. You want to trade zero dates? Let's see what happens here. So this is a bear cross right here. See this right here, right? Positioning is short. We're looking for a rejection to the downside here. So if you want to grab some puts up here and have some stops above it, you can. So I guess the idea here would be, hold on here. If you're an older person, or how do I make it simplify this? So, if I work my whole life and I plan on X amount of dollars, let's say I say I'm going to retire. And how much do I need to retire? And in your brain, you say to yourself, I need $100,000. So I retire. I'm making $100,000 a year. And all this shit that just happened. And all of a sudden, now for that same lifestyle, I have to come up with $200,000. And I'm retired. So if I can't maintain that $200,000 in my retirement, if I didn't expect that huge increase in inflation and wage spiral, that it's going to cost more money, then I'm gonna have to downgrade my my quality of life at that point, right? Or go back to work, or whatever it is I have to do to maintain. Now I have to go up to 150,000, right, or 200,000 to keep up with the Joneses that are 25 years old, right? So I'm 65 or something, and I think, well, I'll be fine. I've got my 2% mortgage over here, and I've got I'm making my retirement's $100,000, and to live where I live in the community I live, $100,000 been way plenty. All of a sudden, it becomes $200,000 to live in that community, and I'm now competing against a 25-year-old worker. What am I going to do there? I'm going to hit that voting booth in this next election cycle, and I don't care who the person that's running, Senate, state rep, governor, president, doesn't matter. All I want to hear is that we're fighting inflation, because I don't want to compete with the 25-year-old to live in this community for $200,000 a year, right? I want to go back to where it was $100,000 a year. I worked my 30 years. I got my retirement. I did what I was supposed to do. And I do not want to get priced out of my lifestyle in my old age. So that is probably a mechanic that is going on in the background. So where they claim to be fighting, I guess my point here is that if they stick with the one more rate increase only, and maybe possibly one more, and hold it until December of 2024 or this next election cycle, and they get your vote because you're still fighting technically inflation, and then they just let it run away after they get your vote. Yeehaw, we did our thing. Now you want some zero dates? We'll trade some zero dates. Hold on. We'll trade some zero dates. Give me just a second here. I'm down with some zero dates. The upper class keeps all the money, pays none of the taxes. The middle class pays all the taxes, does all the work. The poor are there just to scare the shit out of the middle class. Yeah, I think some of that's changed too. I like that George Carlin statement, but I think some of that's changed. I don't think people realize how poor they actually are today. I think we become more normalized to poverty, or at least I see it in quality of goods a lot. I see it in clothing. Clothing is the one that gets me all the time. And then last week or 2 weeks ago, the pizza thing got me too. Pizza thing got me scratching my head. And clothing has been on my mind a lot lately. Quality of clothing, how long, throwaway fashion, all that kind of stuff has been really on my mind. And how we accept things that are cheaper than they ever were before, just because it's our only experience. Let's see if we can turn this around to the upside. We're going to look for some calls here. Let's see if we can take that trade right there. Hold on. I need to see this. I need to see this higher break higher here first, or I'm willing to take that trade. So, and it's another one on that topic is self checkout in grocery stores, right? Self checkout's another one of those things that my kids don't know what like having someone. My kids only know self checkout, right? So at some point they're going to accept it, and just be like, "This is fine," right? We're still in a downtrend right now, so we're still in a downtrend, so still not willing to take that trade. If we begin to turn up, though, I'll take the trade, and we'll see if we can get higher. You think that the overall attitude of the mature individual will be to vote any establishment politician out, given the opportunity they are viewed as the problem, not the solution? It's I'm not saying to you that I think that they're doing what they're supposed to do. It's what they're telling the voter. That's the problem. That's where the fucked up shit comes into our. Like, I don't want to get involved in politics right now, but in any way, shape, or form. But it's what they're telling these voters that's more important, even for us, for what we're doing in the stock market, and what they vote based on that, how they vote based upon that. So we have to, and like, its impact in the stock market is most important. To think for a minute that you're going to get some like, I'll be honest with you, if you really want to get on that road, people are fucking greedy in this country. They're disgusting pigs, and they just want more, right? More, and more. So I wouldn't put anything past the voter out there, especially voters that pay taxes. Your voters that pay taxes, they will, they'll tell you there's something in public, and then behind a closed door, they'll slam that that vote turnstile to save their money. That's what they do, especially right now. I think it's going to be under the microscope in this election. So you guys are saying throwaway furniture too. Lots of people are okay with things that fall apart 3 or 4 years. I agree with that too. This is a 1 minute chart right now. I'm trying to see if I can buy any calls or puts here. Still, I got nothing to buy here. This is just a 1 minute chart in front of you. This is a 1 minute chart down here as well. I'm sitting on the pivot line right now. Let's see it right here. Oh, yeah, I got nothing to buy here. So I bought my calls. I bought some call spreads this morning, and I'm going to hold them on until Wednesday-ish, something like that. Hopefully on Wednesday I should get paid by then. If not, then I'll have to hold them through the bullshit for the Fed meeting, and then hold them in a little bit later. Okay, so that was the talk about next week's rate decision. I think that if you want my take on what I think happens in that rate decision, I think that you're going to get 25 BPS on that rate decision. And I also think that you're going to get, I think you're going to get 25 BPS, and I think you're going to get sterner language in that that rate decision next week. If you disagree with that, if you think we're going to be flat, no rate increase, data dependence in the next one, let me know in the chat. If you think we get 25 BPS, let me know in the chat. Matter of fact, let me see if I can put a poll up today. Let's see if the poll is working today. See if I can get that poll going. So I think you do get a rate increase. I think you get 25 BPS. I think you're going to get sterner language at this rate increase. I don't think he walks it back. I'm in disagreement with somebody that have said that he's going to walk back that stuff. I disagree with that. I think his language is going to become stronger into not just next year, but possibly even further out in time. But let's find out what you guys think. So I'm going to ask you guys a question. I'm going to give you guys a poll here. Fed rate decision. Option 2 is 25 BPS. That's 2. 50 BPS. That's 3. And then rate cut. I'll even put that in there. I think you're out of your mind if you think we're getting a rate cut, but if that's what you think, add, confirm, start the poll. Okay, so I put a poll up here on the bottom of your screen. And this poll right here, you can do I vote 1, 2, 3, or 4. And that's for the next Fed rate decision. Do you think we're going to get, if you want to vote, you can vote. It's I vote spacebar 1, 2, 3, or 4. If you want to vote for what you think the rate increases are going to be, my vote is that we get 25 BPS. And I think you're going to get a Fed that is going to maybe even take this to task and say we're going to go much higher for even possibly longer. He might pull back to the data dependent again, but I think he's going to harp on that higher for longer even more. He's going to lean into it. Yeah, so we'll try to check this in the background and see what's going on. I'm still not registering votes on Streamlabs here. I guess I'm going to have to log out of Streamlabs and log back in and try to fix this Streamlabs stuff. Hey, Jared, good morning. Hey, is Kamel here? How's he doing? How's his family doing? Is Kamel in the house this morning? I had questions for Kamel. He said his family was, yesterday he said his family was in Syria and that they were in grave harm. He was very concerned about his family yesterday. Morning, Jared. How are you? Yeah, I was thinking the same thing. My thesis here, as you guys have known, my thesis since day one has been, well, not day one. I thought they were going to cut rates. I was actually wrong. Well, when they first started raising rates by October, I think of last year, I thought they would start cutting. And he proved them wrong. But this roll in spring, I was expecting, or even summer, and then cutting rates by spring or summer was my thesis, and possibly chasing with rate cuts into the winter of next year. But these GDP numbers, man, and the wage spiral that's happening that's not discussed publicly too often. The wages that are going up insane, like wages are going up, and I don't give a fuck what data they're given. There's other data that contradicts. I've posted that data on Twitter too. That contradicts what they're saying with wage price spiral. There is price spiral, or is wage spiral out there going on right now. So I'm not in agreement with everything that's being said. And the tell was GDP. And GDP was telling that same fucking story. It's like GDP is telling you, like right to your face, GDP is telling you two things. No matter what they give you for numbers, GDP is telling you two specific things. You ready for it? Number one, corporations are price gouging. Number 2, you have the ability to pay for it. Now, I don't know how you're paying for it. I don't know if it's 1 job, 2 jobs, increased wages. Now, I'm looking at those increased wages, but right now they're saying you are paying it. And that goes fully against all the work that's been done at this point. What else we got here? Yeah, Brad, I would give you that. Brad, I like what Brad says. That would be my only counterpoint to that. That we don't get a rate increase if we go flat on this increase would be what Brad says. Just seasonality. We wrap up shop for the holidays. You come back and look at it in the springtime. That's possible too. So, Brad, I would actually give that some credence. And I would give credence to the next one being 50 BPS if they did a skip this time too. I'm with you on that, Brad. 100%, brother. 100%. Okay, so we're gonna move on from this topic. I'm gonna let you guys vote if you want to vote. I know that the poll is not showing any votes, but we'll look back on it. We'll leave it up for the rest of today, and then by the end of the day, we'll check back on it. And I know that's not registering votes, but it will register, or in the back end it'll register votes. Yeah, I can't see them here. It's saying 0 votes here. I don't know why. Some Streamlabs is not working. Leave that down there. Ooh. Okay. See if we can get a reversal to the upside. It seems to be forming here. Just waiting on it's 12:12 right now. I want to see if this hold, the FHYG holds here or not. HYG coming back down to test its 30-minute candle. I want to see if this candle is good or bad. Okay, let me look at some other stuff while we're waiting here. So I got no trade. Okay, so for next week, we're going to talk about earnings that are coming up next week. Get this out of the way, and then I'm going to give you an expectation of what to expect into next week for the market. So we're going to look at today for coming up next week. We're going to be looking at today McDonald's MCD. We're going to be looking at for next week. Hold on here. What's happening here? What's going on? I'm having some problems here in the background of the stream. What is going on here? Having some streaming issues today. I'm going to be looking at Pfizer, PFE, AMD, Budweiser, Bud. And just a heads up that I do own Budweiser. Let me see what else I want to look at for next week. Dude, what is going on, man? I'm having some streaming. If you guys lose me on stream here, I'll reset the stream. I'm gonna be looking at CVS, Airbnb, PayPal, What else am I going to look at? Oh, I should have wrote. Hold on a second here. My stream is lagging here. I'm having like having issues here in the background. One, two, three. Okay, so that's McDonald's on Monday. Tuesday, we got Apple too, don't we, on Thursday, I think? Big bad boy Apple. Dude, what is going on right now? We got Pfizer and AMD on Tuesday. We got Bud on Tuesday. And then on Wednesday, dude, what is going on here? I don't know what the fuck is going on here. What is going on? Hang tight, I remember some technical difficulties in the background. Tuesday, AMD, Bud. Got all that. Oh, yeah, I'm having problems. We got CVS on Wednesday. We got Airbnb on Wednesday. We got PayPal, I believe, on Wednesday. Let's see if we got all this right here. Yeah, we do have Apple on Thursday. So Apple on Thursday. We got Starbucks. We could do S-Bucks. Everybody likes S-Bucks. I don't have any position in S-Bucks anymore. We got Shopify. We'll look at Shopify. That's all Thursday. So a big earnings day on Thursday. Marriott, I always like them. If we can, we'll try to do Marriott if we have a chance. Well, yeah, ING. We got a pretty decent day on Thursday. Eli Lilly, LLY. I guess Friday's kind of isn't really much going on Friday, so we're gonna go back to Thursday. Maybe hit on some of these Thursday. We'll do Marriott. We'll do Eli Lilly. We'll do S&P Global. Those guys do all the data for the stock market. Should we do bookings or Cigna? I don't know if that's even worth doing. Let me see if I can see anything else. I'm looking for retailer stuff. Oh, yeah. Palantir. We'll do Palantir. mRNA. We'll do them. Jesus, we got a ton of big ones to do. SQ. Oh, boy. Another big-ass week. We got Rocket, RKT. All right, we got a ton of crap to do here. We got so much shit to go over today, it's not even funny. All right, so Thursday's the big-ass day, right? The day after Jerome. Kind of a big day on Thursday. Oh. Hold on here. NASDAQ just climbing the wall of worry right now. Okay. So we got a lot to look at today. that off. You think Dana White did a good move putting Bud back on? We'll talk about Budweiser. Budweiser, I didn't like all the negativity surrounding Budweiser was kind of a head scratcher to me. Not a head scratcher. It seemed like the normal place for it to be where it was. I bought it on that low, so I'm still happy with my purchase. But I've been exiting a lot of those similar trades or the same or similar trades into their ERs. I've had good prints on all of them, so I'm trying to exit the market on the last of my market holdings right now. Yeah, we're going to do Rocket Lab. I think we're doing Rocket Insurance, right? Was it Rocket Insurance that we're going to do? Or you guys want to do Rocket Lab instead, RKLB? Defaults will begin soon? I don't think so, man. I'll be honest with you. I don't know anyone that's laid off right now. All my friends are wealthy. All my friends make 100,000 plus. Well, not all, but a lot of them do. None of them are laid off. I have family members buying houses right now with high rates. I got people that don't care about money right now. I mean, they care. They're feeling the pain, but not like you think that they are. I don't know anyone that's feeling that pain. It's a weird thing when you're listening to people complain is different than reality. You're like, when you hear people complain, it's when I was in the Army, there was a saying. There was a saying in the Army that if you can feel pain, that means you're still alive. And that's not what we're looking for. We're looking for actual pain, or not pain, but destruction of these people with bad debt. And we're not seeing it. So it sucks to say that. I don't want to say that, but that is the truth. You're looking for. See if I can bring this over so you can see this better. It's brutal to say that, but so anecdotal evidence means nothing. And people complaining on the internet means nothing. I know that the credit card debt numbers look terrible. But these people are working, man. I don't know how they're working. I don't know how much they're working. I'm assuming they're breaking their asses out there working. Or they're just getting paid more to absorb that debt. That's another aspect to this. People are getting paid more. They're like debt ridden, but they're paying it. That's a driver here is, are they paying it? And they are. They're paying it. That's a problem. We need job destruction. We do. We need mass layoffs. We don't have them yet. We don't have them. We need them. We don't have them. Unemployment. There's we're in a Goldilocks zone right now with employment. Still no trade for me here. No zero dates. Not going to do anything with this. I'm going to start to chart out. In the background, I'm going to start to work on a bunch of these tickers for next week. As I get them done, I'll post the chart for you. You can cut and paste it. I'll give you my take on what I expect to happen into each one of these tickers. I don't know how many of these I can get through today. There's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 tickers. So I'm going to try to do this fast, get these charted out for next week so you guys have an idea of what to expect into next week. And then towards the end of the day, I'm going to give you an outlook for next week and the market into next week, my expectations from that point forward, and the volatility that lies ahead. Because we've got some crazy volatility coming our way. Crazy volatility. And we've got that daily trigger coming down from the weekly trigger. And as these days pass, like today, the weekend, Monday, Tuesday, Wednesday, Thursday, Friday, it's going to get kind of wild around here. And if you're in, I want to express this because I said it yesterday too, that you're going to see a lot of volatility here in the coming days and the coming 2 to 3 weeks. You should see some violent moves up or down. If you're caught upside down either way, you're likely going to get paid either way. Let's say you're short or you're long and you're like, oh, shit, I'm getting fucked. 2 days later, you're likely going to be back in the money again. So don't get squeezed out either way. So give me a minute here in the background. I'm going to start working on this stuff, and then I'll start presenting this stuff to you. I'm going to do these in the bottom over here for you guys so you guys can see as I work on them. Mute that poll so you can watch me work on these. So on the bottom left-hand side of your screen, you're going to be seeing me working on these tickers. This is the first one over here, McDonald's. They report on Monday. God, I hate McDonald's. McDonald's right now staying on trend so far. They did have some demand step in and buy at 245.43. They are still in distribution, though, on their weekly and monthly velocity, even though there was a dip buy. They have an expected move of 2.8%. And the report is before market open on Monday. It looks like people are positioned, too, on this ticker. For a positive read. 265.06. $250.55. me one quick second here. Get something else I got to do. What am I looking for here? Oh, reset. Can I reset all that? What's going on here? Why is this not? Hang tight 1 second, guys. Average price target, 39 rating, 11 strong buys, holds, no sold, no overhold. Yeah, I'm on this trade. I like this trade. Okay, so I'm looking at start here. Looking at McDonald's. They've got a report on Monday morning. I expect weakness on McDonald's. McDonald's currently trading at 257.56. You can stay long here at that number, but I would like to see some weakness into Monday if possible on McDonald's. But I do have an upside price target on McDonald's of 266 on their report. I'm going to expect a positive report for those guys. So a low, if you have a chance to buy 251 at any point, with a price target of 260, 265.25 and possibly higher on their earnings. So I'm going to be looking for 270 on McDonald's earnings. Their daily chart looks great. Their daily chart does not look good. It looks like it's in distribution. So it's not positive, but in the short term, it looks great. So I'm going to expect a spike on their ER reports, but it will be short-lived. Now, there are a lot of analysts calling for McDonald's to go to 312, 310. That's their target price, much higher than that 270 expectation. It's possible that I would expect that they sell maybe a high of 275. Let me see if I can give one more target up there of 275, but I think it's 270 is going to be that top for them. So expectations for Monday McDonald's report, 270, possibly 275. I don't know if I'm in agreement with the call for 312 based upon market conditions. I don't know that we can get that off of them. And matter of fact, I'm gonna pull back my expectation. I'm gonna limit that expectation to 270 at max on McDonald's, not 275. And then maybe some consolidation back down into that 260. Take the money and run. And then directionally, we'll find out into end of year. I think we get a roll ultimately on McDonald's. So if you're listening to the analyst reports on McDonald's, I would disregard those. The daily chart saying that they're in distribution, though you might get a nice report with a take the money kind of approach on McDonald's. So if you are long McDonald's or trying to buy a dip on McDonald's, I think any positivity will be short-lived. And then you are ultimately looking for a low to buy in springtime. That low should be 213.72 and sometime in February for McDonald's to expect that roll to take place. So just be aware of that roll. And if we do at any point trade that 275 on McDonald's, and show this here. Get a 30-minute chart here. Hold on. So switch over to the Webull chart. So here's McDonald's, and I'm going to expect some weakness possibly today. Now, it is above its hourly trigger, so that is bullish, believe it or not. You can see it right here. This is bullish on the intraday. If it can hold itself up and just start trading up into the close, then possibly have that report. That is possible to happen on McDonald's. You get your 270, and then it sells back down. Looking for that expiry, and then maybe you get your next leg up into that 270. But even so, if you want to set an alert down here in the end of today, if you're trying to jump on that trade, you're trying to pick that trade up for a Monday trade on McDonald's, and they do roll down into this close, you can set an alert down at 264, set an alert. If not, we should trade up and into that ER tomorrow and bounce down here. So you should bounce down here, consolidate on that daily trigger. But it should also be short-lived. Upside target 270. Analysts calling for 300 on McDonald's. You have a possible extension above to 275.79 up here. Now, any kind of squeeze up higher, I'm going to expect to get sold down, and we're going to march to the downside. The weekly trigger is rolling down right now. This is pretty bearish, and I would expect another rejection, just like this one right here. Right, you come back down here, you squeeze back up here, and then you get your next roll down. That roll down will lead to, or should lead to, some death and destruction into. Into the early springtime. We'll look at that right now and just show you where that is. That's down here at this purple line right here, and that is at 216.87. Could take a few months to get there, but 216.87. And the idea here would be to look for a low of 270. Yeah, right around that 217, 220 something like that into end of year at some point. So McDonald's bullish into their earnings, but then take the money and run. There is this target above that analysts are saying, yeah, you're going to get all the way up to this 300 up here and just like keep trading it, is what they're telling you. But on a daily basis, there's a disagreement here on this. And you can see it right down below, and that is this velocity right here. And this velocity right here is showing that this should get sold down into this 217. So that's the expectation on their earnings, that we're going to trade up and then sell the news on McDonald's. So there goes McDonald's. Next one we're going to do is PFE. Whew. PFE bloodbath in it. Good riddance, PFE. PFE reports on Tuesday. It's nice to see PFE finally coming back down again. Price target on PFE into their earnings, 26.35. Though they seem like they're bottoming right now to some extent, I think it's still short-lived. They're trading currently $30.41. Their price target was $33. They're overextended below that target to the downside. Their 1 year trigger is at $29.46. They're kind of bottoming there right now. So set an alert down there to buy that 26.75. And depending upon if we can get there into their earnings, I would expect some kind of a dip bounce. So I'm bearish on PFE right now. Yeah, price target on PFE, 26.35. If they get down into that 26.35 into their ER, I would consider a good ER, but I'm going to go with negative on. So I went positive on McDonald's. Hold on, bullish on McDonald's and sell the news. PFE, I'm bearish. Price target 26.35. They only have a the next expiry is on November 3rd. They only have an expected move of 3.9% into November 3rd. That puts it at $29.22. And we're already trading 30.42. So someone's going to be wrong on this one. $31.60. That's really not a. Yeah, I'm bearish here. I'm pretty bearish here on PFE. 30-minute time frame looks like it's almost ready for a dip buy, but I would be looking for that $26 as a bounce point. Check that one day one more time. And at that $26, geez, maybe even 22. I'm going to go with 22 in this one. I'm pretty fucking bearish here in PFE. I got a price target of $20. Are you guys bullish on PFE right now? Yeah, I think I even have a target of $20 on it. PFE, I'm pretty fucking bearish here on it. And I think it's waiting for a capitulation move in its ER. And they only have an expected move of 3.9%. I think it's bigger than that. So I'm pretty bearish here. You guys are not bearish on PFE. Do you want to tell me why? I got 420s and 420, 440s for $714. $714, December 29th, 420, 440Cs. I'm going to hold them regardless of where we are between now and Wednesday. I'll reevaluate that position on Wednesday. So I don't look at it, I don't touch it, I don't do anything on it. They just stay on. Pretty bearish here on PFE. If anybody's not bearish on PFE, if you have a reason not to be bearish on it, let me know. Phison's earning cut was sort of telegraphed. Yeah. Yeah, I'm pretty fucking bearish here on PFE. Bearish on PFE. Next one I'm going to look at is, I'm not going to look too much deeper into this because it looks like it's going to get a bloodbath. AMD. That's a big one I know for you guys out there. Still no 0-day trade for me here. Yeah, we got a roll coming up on HYG here. VIX cranking to the upside, so watch out for more blood in the close. HYG rolling over, VIX rolling up, Apple sitting on a precipice with a bear flag or bear cross coming on top of it right now. Tesla looking bullish right here. NASDAQ still bullish, though, overall. NDX still bullish. Dixie looking kind of bullish, kind of like middle of the road. But VIX looks pretty bullish here. AMD. October 2022. Bullish on AMD. Woof. I'm actually pretty bullish here on AMD. Did you guys see the founder of NVDA, what he was talking about? He wouldn't have done it again. Kind of bullish here on AMD. Let's see here. Yeah, I'm bullish on AMD. Their earnings are Tuesday. What am I looking for here? $103.85. I'm tacitly bullish here in AMD into their earnings, but not after. AMD with a bull cross on the hourly. As long as they stay above 95.86, price target into Tuesday 103. Yeah, price target from here, as long as they hold 95.86 and 92.86 would be a dip buy. $30-minute looks pretty fucking good right now. 30-minute looks great on AMD. No luck. I'm bullish on AMD into their ER report. They should print 104. Scratch that. 102.59, possibly 103.30. Any chance you get to buy AMD before Tuesday at 93.51 if possible, or 95.34 for that upside move? Bullish on AMD into their. Let me see if I can bring this chart for you guys. So here's my chart for AMD and their earnings call. If you want to keep that, as long as they stay above this zone right here. Expectations 103, 104 into their earnings report. So that's AMD and bullish. Remember that AMD likes to have their ERs, then they come back out. They normally have a large short on them. And sometimes you get the move after their report. So the report is on Tuesday. So if you're going to trade this AMD, this could come after. Let me check their November 10th would be what I'd be looking for here. So this target over here would be right over there. You remember, if you guys remember AMD's last report, they sold the fuck out of it. And then, I don't know if it was the last report, but they sold the fuck out of it. And then it just blasted to the moon. So I'm going to temper my expectations. $165 by Tuesday. I'll bounce back down, and then we'll go after the 104, 105 into November 10th. November 10th for AMD. But I would say neutral to bullish. So AMD, I said bullish, but I'm going to go with neutral. Neutral and then bullish into November 10th. You have the chart down below. You can snip it and watch it from now into the report. They have an expected move of 7.1%. So a pretty good expected move on them as well.
Stacy Rascon of Bernstein Research.
How can I be bullish on AMD? ARM. Is that close enough? Does ARM work? Hopefully ARM answers that question. I think that's all I have to say is ARM, right? Nearly 30% of the S&P 500 is reporting earnings next week. Let me read this article off to you. So these stocks are reporting next week typically beat the street and rally. Wall Street is bracing for another busy week of earnings as the reporting period reaches its halfway point, and certain stocks are likely to perform better on the back of their reports. Approximately 29% of the S&P 500 is set to report next week. Apple will be one of the most anticipated companies. Several pharmaceutical companies, including Amgen, Eli Lilly, Moderna, are also scheduled to announce their quarterly results. Wall Street will also gain insights on consumer strength from various consumer-oriented companies such as McDonald's, Airbnb, PayPal, and Starbucks. Heads up here, too. All those companies I listed there, we're going to chart them all out, except for, I don't think I'm going to do Amgen, but we are doing Eli Lilly, Moderna, McDonald's, Airbnb, ABB, PayPal, and Starbucks. Companies that manage to top consensus estimates for the quarter or raise their forward guidance could see their shares rise as a result, though it's far from perfect science. Conversely, this is crazy to even read. Conversely, underperformance or disappointing guidance could put shares at risk of a sell-off. So I've got a screener here for companies reporting for next week that have a record of outperformance. The following stocks have beat analyst expectations at least 85% of the time and rise at least 1% on average after they release their earnings, per data from Bespoke Investment Group. So I'm going to list these companies off to you right now. I wasn't watching here. I'm gonna list these companies off to you right now, and I'm not gonna chart them out for you, but I'm gonna list them off. Okay. ANET, ANET, WK, that's Workiva, BLD, Top Build, MA, Mastercard, AFG, American Finchi, I believe, or Fincell, AYX, IOSP, KAI, PAYC, PI, RAMP, CDW, CRTO, GNRC, that's Generac, Bookings Holdings, BKNG, ELF, FLT, FOXF, Roku, LNTH, Apple, Hubs, IVAC, LOPE, MTZ, MSI, and PCTY. Some of the picks here include Workiva, Arista, and Apple, and Elf Beauty. So I'm going to read some of this off to you. Investors will be keeping an eye on Apple on Thursday after the bell to gauge demand for its products and services, particularly sales data from China following the launch of the i15 lineup. The company has the highest market cap out of all the names in the list. Apple has beat earnings expectations in 89% of its past reports and typically 1.3% on average following a report. The stock remains up nearly 30% year to date. Remember, we had a crash supposedly, right? 1987. Stock remains up 30% year to date, but has fallen about 15% since its 2023 high at the end of July. Shares had their worst day of the year following the company's fiscal third quarter earnings report. Goldman Sachs is expecting Apple's fiscal fourth quarter results to come in line with expectations. Quote, "We're encouraged by the acceleration in services revenue growth, driven by a recovery in app spending, as well as continued growth in the iPhone installed base and increasing hardware attach per user," analyst Michael Nedge said in a Wednesday note. Next one is Elf Beauty is slated to report results Wednesday. The company has managed to beat earnings and revenue estimates, so we'll put Elf on there too. 96% and 89% of the time, respectively. Shares typically gain 1.6% on the back of the report. The stock has already soared more than 87% in 2023. Wall Street remains bullish on Elf Beauty, with 11 out of 14 analysts covering the stock, rating it a buy or strong buy. JPM says it's a growth opportunity. Arista Networks, cloud networking solutions company Arista Networks, is the only company on the list with a perfect track record of beating earnings and revenue estimates. The stock rises an average of 1.2% after it posts its quarterly results. That's Arista Networks. Despite shares pulling back nearly 13% in recent weeks, the stock is still up more than 45% in 2023. So that's Arista Networks. Workiva is another cloud software-based company that made the cut. The company has the highest earnings day jump on the list, with shares gaining 2.46% on average after its results come out. Workiva also has a strong history of outperforming estimates, with 197% earnings and revenue beat rates, respectively. The shares have tumbled from about 16% from their year-to-date highs. In September, pairing some of the stock's year-to-date gains down at 12.5%. You know, it's fascinating. I'm looking at some of these tickers here in this list, and it's been a good fucking year, man. It's been this year has been outstanding still. Outstanding still day on these stocks. So bullish on AMD. Price target 103 into their earnings report. All right, let's do the next one. We're going to do Budweiser next. I own Budweiser here, so this is going to be important for me. It's one of the ones that I have not cut yet. I don't put too much. SPY a little bit weak right now. Go back and do a checkup on SPOOs right now for you. SPY a little bit weak, coming back down, checking the previous lows. We've got this previous low right back here. If you watch this target right now, it's coming right back down. We'll check SPX and see if it has a little bit more down to go. SPX right now currently testing its previous low at 4128.37. So we'll see if we get bloodbath down here and trade that monthly trigger or not. Okay. Why is none of this stuff working on, what's going on down here? I'm having a little bit of blood here in SPY. There it goes. Come on, Budweiser. Budweiser has their earnings on Tuesday. They did have some positive news come out recently of a partnership with, I believe, the UFC and Dana White. I'm not really a fan of news, good or bad, on these tickers. I know that it's popular to do that, to like the news. I have mixed feelings here on Budweiser. I should have taken the money and ran on 54. And they did get a rejection off of 54 on their daily trigger back on October 25th. Their previous low all the way down to 51.64, excuse me. And this is one of the tickers for me that I have grave concern for. It's more of a permanent repricing of it into next year. So I was thinking about holding it for 5 to 10 years, but I'm still unsure here. We even have another low down here at 44.77. They had the high above and a rejection on their quarterly at 67.47 on Budweiser. It's looking pretty bearish into their ER next week. SPY bleeding down into their monthly trigger right now. So I can show that to you guys. So I don't know exactly what to do here on Budweiser. It looks like they want to close a gap down below at 47.32. So I might get stuck holding this ticker. I'm pretty bearish on their ER here. And I'm going to be looking for blood on their ER down to, I think I got to go back on a weekly basis to find this. Yeah, Budweiser has some real risk here. Yeah, I don't know. I don't know if I agree with that. Tough to say here. I'm bearish on it, and I'm bearish on Budweiser, and I own Budweiser here, so I'm not feeling good about it. I could get trapped in this ticker for 10 years. I'm fairly bearish on Budweiser here. I'm checking out small on a lower time frame. Yeah, I'm fairly bearish here. 51.05. Expected move on Budweiser is downside 51.05 and then upside 55.21. I was hoping to get out on this ER, but my expectation here is a downside move. Whatever that downside move is, likely a good dip buy, though. I have a deeper target of 47.12. So looks like I'm gonna get trapped in this one. Let me see if there's any news out there in Budweiser. Bank of America upgrades AB and InBev sees margins expanding as brewer leaves Bud Light backlash. Buy Bud Light owner says, how Modelo, that doesn't mean anything to me. UFC strike multi-year partnership. Budweiser to me looks like a Budweiser to me looks like a bloodbath into their ER, but a probable dip buy. I'm gonna bet that it's shorted into. I'm gonna bet that it's being shorted pretty heavily, and they're looking for a good price to buy. So price target on Budweiser on Tuesday, 47.12. 47.12 into their earnings report. 47, and it could possibly go deeper. It could go down into the 30s, into the mid and even low 30s, depending on how bad that report is. So bearish on Budweiser. And I don't know that it's a function of, I think it's more a function of trying to get a better price. That's about it. And just market making, that's it. Yeah, they just partnered up. They just partnered up. They're trying to say that it's rear view mirror stuff for Budweiser. I'm looking at Budweiser on more of a weekly basis. So we're talking going back decades here. It's at its buy point. It's just a matter of getting the best price possible. And I got this feeling here that we're gonna get it. Yeah, and Meta's a prime example of that right now. I'm extremely bullish on Meta here, and it's just it's a function of getting the best price for that bullishness. So I guess I'm bullish long term on Budweiser, but I think we're gonna get a bloodbath on it. We are coming into a bottoming on its daily chart and its 30-minute chart. But where that is, there's still more down to go on this ticker. We can go as low as back in March of 2020, we went as low as 32.61. So I don't keep that off the realm of possibility. You could see like blast down to $30, and then that's where the dip buy is. I think this might become my worst trade of the year. I didn't want to sell it. I wanted to hold it for 5 to 10 years, but I don't want it to get repriced where 10 years from now it's worth what I bought it for. So I have some concerns about Budweiser. Not happy with this buy. Let's see if I can show you guys this chart in a 30-minute here. I'm going to show you the one-day chart on it. Maybe that's the better way to look at it. No, wrong screen. So here is a Budweiser chart. This is the full COVID move. This is October move right here. So you had demand step in here. You got demand step in right here. You would expect demand to step in right here. You got your first buy, next buy, next buy. But if there's a chance to buy a dip down here, that's what I'm looking for down here is like just this chance. So this is a smaller view here, looking for a dip buy down to 50.92 and 47.12 possibly. Keep your eye on Budweiser, though. If the report is good, if it's a positive report but it still bleeds, it might be a great trade down here. If their report is terrible, if the report is awful, then watch the fuck out because you will see Budweiser blast down and eventually trade $30. $30 will definitely be on the table for Budweiser. So I'm bearish on Bud. Even with this this bullish news. Yeah, dollar. That's what I'm gonna have to do. It's not bad. Like I'm on track to make a, still close to mid six figures. So, 350 probably for the year. So I'm happy with all of my investments this year. I'm unhappy with what I thought I was gonna get $500,000 and I didn't. But I might get stuck with some tickers too, and I think Budweiser is gonna be one of them. I think Budweiser is gonna be like one of those fucking things that I just have to fucking suck it up and hold on to it. Like it's get like that whole commentary of it's not a lot realized loss until you sell. I think that's what Budweiser is going to be. It's in the family now. I got it at the bottom too. Like I'm not upside down in it right now, but I'm not selling it either. I want it to print. And Bud Light sucks. It's such a shitty ass beer. We've got a roll down on HYG right now. We've got VIX rolling to the upside on the 1 minute chart. VIX looking pretty bullish here. HYG looking very bearish right now. Dixie looking bullish right now. Apple on the cusp of rolling down. Don't forget they've got ER coming up on Thursday. NASDAQ still ramping right now. Tesla still bullish right now. They're cleaning out the options chain right now. So I'm taking a peek at the options chain here. Looking at 411Cs. Setting up a trade here for a bounce. Okay, so we've got Budweiser out the way. Then we're going to do CVS. I'm probing down on monthly trigger right now. We're going to check SPX monthly trigger, and I got a trade set up here to buy. Still no buy for me. Want to see this probe down here? I am long right now on 411C. Expiring today. I just bought that 1 minute bar right there. Okay. CVS. report date, November 1st. Consensus EPS, $2.13. CVS Health. CVS. Ooh, yeah. $2010. Where did that start? 2011. I'm interested on CVS here. I'm bearish on CVS into their ER, but I'm looking for a dip buy on them. I'm going to set an alert on CVS here. CVS is being accumulated. Now it's bearish today. I'm bearish on their on leading into their ER report is on Wednesday, but I think it gets bought. Just keep an eye on CVS into Wednesday. I'm looking for a capitulation. So I'm bearish on CVS into their ER, but there's accumulation going on right now in CVS. Their ER expectation is 62.94 on the downside. I think they trade $54. I think they actually trade $54, but keep your eyes on CVS. So currently trading 66.39, but I am bullish here. There is a lot of accumulation on CVS, a whole ton, and they're being accumulated. So they're not in distribution right now. So if you can catch a good break on CVS, 54.04. And as a matter of fact, the last time we talked about CVS, let me go back here like this. Yeah, we'll start to clear all that stuff up over there. Wonder why. Well, can't say why I am, but no, I don't like that either. So I'm bearish into their ER or just even into next week on them, but I am interested in I am interested in buying that. Now, I have to disclose, well, I'm not going to disclose that. I'm interested. So, what should I say on CVS? That I'm bearish? But want to buy. I'm going to set an alert down here in case we get that chance. Price crossing down. Okay, so I've got CVS here. I set an alert on CVS because I am interested in buying any kind of weakness into Wednesday. They report into Wednesday. If they can trade down into that, like $62, $55, anything like that, then I'm gonna look for a buy. I might buy this company. So CVS, and I'm not going to tell you why I like them. One of the reasons I personally like them is because they've teamed up with the federal government on some new programs. They've teamed up with, I believe, Aetna, some other company, and they've got a series of strong analysts are saying strong buy on it. Their consensus EPS forecast is of $2.13. Last year's EPS was $2.09. I think they beat it, so I think they might have some weakness into their ER, and then they actually have a beat. So I want to watch this one into their actual ER report. Yeah, I owned it and took the money and ran. I took the money and ran on CVS, but I'm not going to talk about how I know stuff about CVS, but I do. I know stuff about CVS. I did run that trade up on CVS, made a bunch of money. And I'm looking for some weakness, more on just shorts on it, and then a better price. But I'm overall bullish on CVS. So like $55. How are you guys doing? Are you guys long with me or no? Are you guys long here with me or no? Am I taking all your money right now? I can smell it. It's in my pocket right now, by the way. Am I taking all of your money? I think I am. Now I'm up 16 cents right now, so. You guys want your trade to make some money today? Yeah, well, if this rolls down on me, I got to keep an eye on it because I don't want to lose any money today either. CVS, it has great potential. It looks more like a short it looks more like pricing operation. So CVS, I don't know how to. I wrote down bearish, but want to buy. Airbnb. Abinib. 12-month forecast, $148. Yeah, I don't know about that. It's got a lot of buyers down here. You know, Airbnb, I like the stock. I don't like the price. Like I know that everybody hates Airbnb. I have Airbnb. I'm bearish Airbnb, but on their earnings, I don't know that I am. I'm bullish on their earnings, but I need you to know that I'm bearish on them as a company. So here's what I'm going to say about Airbnb. I wouldn't mind owning them at $100. I think they trade that $100. I'd like to see them get repriced. I don't like them at $100. I'd like to see Airbnb be like a $20 to $50 company, like trade that $20 to $50 range, I don't think they're worth $114. I guess I have to check their PE ratio, but hold on here. Yeah, their Q1 and Q2 were outstanding. I mean, it's not, you can see their quarterly is looking great. I'm bearish on them right now. I'm bearish on them. I'm fucking bearish on I'm bearish on these guys. Are you guys bullish on Airbnb? I'm not. I want to see these fucking guys get repriced and be more reasonable. I think they're out of their fucking minds. They haven't. The crazy part too is they have an expected move of 8.2%, and they have an even lower target than mine. Their lower target is 105.62. I've got 106, so they're pricing in that downside move. They've had some pretty decent earnings too. I think they get shorted into the ground into Wednesday, and then they catch a bounce. So PayPal, keep an eye on that. I'm going to set an alert on this one too. I'm going to set an alert on this one. I think Airbnb goes down into the report and trades 105. Set an alert on this thing. Crossing down. Airbnb into next week. Bearish into their ER down to $105. Though they likely have their expectations are higher than they should be. They have a lot to live up to in their earnings as well. If they do give that up, that 105, you could see a major downside move in Airbnb. When did this run start? December. This is May. Yeah. I'll leave it there. I guess you could take that one out too. You could take all that out right there. If they don't beat in a big way, $88. I'm bearish here on Airbnb. I'm just gonna go with bearish here. Everything that I'm looking at is fucking bearish. I am bearish on Airbnb. Bearish on Airbnb with an initial price target down below of 105, and then a rejection, and ultimately a trade to $85 on it. A 30-minute looks good. 30-minute disagrees with me. 30-minute says I should be bullish on Airbnb. But I'm bearish. Price target for me, $85. Airbnb, bearish. They're going to need a big beat. It looks like from their last two reports, too, that they're pricing in a positive report. Yeah, I've got 3 Airbnbs and Abnibs, and they are a better company than people think. I know they catch a lot of shit out there. There's a lot of horror stories. There's a lot of horror stories on Airbnb from both sides, and they get the loudest voices, right? Now, like when we take off when I put my Main Street hat on, I've had bad experiences with Airbnb. So I rent Airbnbs frequently, and I've had some horrific Airbnb experiences. Now, if you're bullish on Airbnb, As long as we get above 116.59, you can possibly take a trade. But I'm bearish on it. It's like my Main Street hat on Airbnb is weird. It's I have a lot of bad experiences with Airbnb, especially the more money I spend. I find really good deals on Airbnb when I get there's like a sweet spot with rentals on Airbnb. But when I've been highly disappointed in expensive rentals, things that are like anywhere from $5,000 a week to about $15,000 a month. I've rented Airbnbs for summer vacations and stuff like that. I used to do it. COVID, I was going away all the time, but I don't have that time free anymore. But I'll still rent like weeklies on them. And any of the expensive ones, the more expensive they get, the less happy I've been with Airbnb. And mostly it has to do with the pictures. They tend to show pictures of really nice places, and then I get there and the picture looks great, but the furniture is uncomfortable. It's built for pictures only. Like they're like Instagram looking shit. But then you go and you sit down, you're like, this was made for. This is like something cheap knockoff of something expensive. So it looks great, but it doesn't have the function of really nice furniture. So that's where I run into real major issues is higher priced Airbnbs. So I hate Airbnb as a user oftentimes. But you know, another thing too, I was just looking at some booking. So yesterday I was booking a ski vacation for this winter, right? And I looked at Airbnb versus staying on mountain, ski in, ski out. And the value that I got from looking at Airbnb was wonderful. I'm watching this because I'm long right now. I don't want to see us collapse through this. I don't want to see that break right there. You see that little dippage down here? See those stink bids down there? I'm trying to staircase this down right now, trying to creep below. So I got to pay attention to this, make sure they don't take me out. So, like, Airbnb is a weird thing. Like, you have to be, like, people say, like, I wish it was the old Airbnb where it's cheap. My Airbnbs are all cheap. I don't charge a lot of money for Airbnb renters. I try to keep people, like, if you come to my Airbnb, I want you to feel like you got a deal. Or like, not a deal. Like, you should have paid more for the Airbnb. And as long as you feel like that, I seem to do well. It's like you feel like you should have paid more for the Airbnb. Changes your attitude from, hey, this isn't what I expected. Not expected. This isn't as nice as I expected. Right? So, anyways, then another whole other fucking story. So, but, so yesterday, right? Last night, I got home and just had a bunch of friends get back to me, and they want to go on a ski vacation this winter as a group, like a big bunch of us to go skiing. And as a group, we're going to go to a resort for a few days and go skiing. It's not going to be a long vacation. It's going to be like 3 days of skiing over the course of a weekend. And I was looking to rent a slopeside condo lodge thing with fireplace. And it was, for the weekend alone, it was $10,000. The hot tub was shared, gas fireplace, and it was okay. You're kind of trapped in the resort to an extent. The food on resorts is not known for being that good. Usually going to town to eat. So then I looked on Airbnb last night, and I found, for the weekend, beautiful, right in the town, with private hot tub, huge 6-bedroom, 8 bedrooms, for anywhere from $1,000 to $3,000. The $5,000 ones were getting really nice, but like $1,000 to $3,000. Not bad for 4 couples and a bunch of kids, right? $3,000 for a weekend for 4 couples with kids, dirt cheap. No. You guys go skiing. My skiing costs me, I go to Utah every year, If I go to Utah right now, it's costing me $20,000 to go skiing with just my wife and kids. I pay $20K right now to go skiing in Utah. It wasn't like that before, but it is like that right now. Yeah, I don't know where you guys go. Like, there's a whole. So if you're a local, so I'm a ski bum. If you don't know that, I've spent most of my life living in ski towns. So as a ski bum, I can go to Utah and ski with my buddies, my friends. I can go to Vail and ski there, Breckenridge, wherever, Telluride, you name it. I can go anywhere I want, ski dirt cheap. Stay with my friends and use a buddy pass, and I'm skiing for free. But when you ski as a tourist, that's a whole different world. If you don't live in a ski town, well, people that go to ski towns, they spend bank to go skiing, and they spend stupid money. Like, I have an Epic Pass to go skiing. So I typically go to an Epic Pass mountain. So it's cheaper for me. But if you're just like out and about with no Epic Pass and you're going to go skiing on a family vacation, right now it is bank. Like stupid expensive. Stupid. Like 20 grand for a week, $20,000. Between airfare, hotels, food, all the little nickel and diamond service fees, resort fees. Fucking bellman at the front fucking door that carries your goddamn. Like, people don't even carry luggage anymore. Like, they put it on a cart and they have their hands out for a tip. So, skiing has become. Has anybody else out there experienced how expensive skiing has become? Is that just me? Big White, don't know it, never been there. And I've skied everywhere. I've skied the whole country. So I don't know where Big White is. Or I should say most of the country. I've skied most of the country. I've skied almost. I think I've skied every mountain in New England. I've skied most of the Midwest. I've skied all of the West, every mountain in the West except for a couple places in Wyoming. Well, one place, not Wyoming, Montana. One place in Montana I haven't skied. Oregon and Washington I haven't skied. I've skied Revelstoke though. Whistler I've skied. Most places in the North America I've skied, and then off-piste stuff, a ton of that too. Yeah. I used to live in Vail. So I lived in Vail for years. I lived in Park City for years. I live in these ski towns. That's where most of my living has been done, in very wealthy ski towns. Yeah, but right now it's a fortune. So prior to COVID wasn't so bad. The last 2 or 3 years, it's been fucking wild. Like wild. Super wild. And whatever. It's whatever it is. It's wild, the expense of skiing. It is fucking wild. And I'm kind of angry about it too. Well, I'm more angry about the dining. I have not been impressed with services and food while skiing. Let me say, it's a funny story. So I'm planning a trip right now to go skiing this winter. And when I was a kid, my dad would go skiing with, how I learned how to ski was I was raised in Boston, in the city, right? In Jamaica Plain, in Boston, Massachusetts. That's where I was raised. And my dad did quite well for himself and wanted to ski. And so he taught me how to ski. He brought us up to New Hampshire to learn how to ski at a small mountain called King Pine. And then later on, what was this other place called? Maybe Great Woods or something. I can't remember. But King Pine is a shitty little family-style mountain. And we're kind of doing that trip this year with my kids, with some friends. So what he would do, anyways, we would go, that was our family mountain. We'd go there every week, and then we'd take a new trip somewhere else around New England for a week or two vacation every winter. Twice a winter, we'd go skiing for like a week. And then every weekend, we'd go skiing. We'd just leave the city on Friday, go skiing, and then come back down into the city after that was done. So, but one thing, fascinating thing that my dad did was, for us to go skiing was, as we became teenagers, it became more expensive to go skiing. And our friends, he'd go on a trip with all of our friends and family um, to go skiing, and to save money, they would go together and rent a lodge together. And that's what we're doing on this trip for this winter. Rather than spending the $20,000 to go to Utah this winter, we're going to go with a group of friends skiing and share that cost and do instead of being on the mountain, we're going to be in the town, share the cost of lodging and all that other kind of stuff because of the pure expense behind it. Yeah, I've skied Squaw Valley. Skied Squaw Valley when I was young. Skied Heavenly. Skied North Star. I've skied everywhere, man. I mean, every fucking where. I took a trip once for 6 months across the U.S. and spent the entire winter skiing from mountain to mountain skiing. When I was young. It was awesome. Does Webull do options? I believe they do. I think they actually launched level 3 recently, too. Yeah, Mount Hood, I've never skied. Matter of fact, I'm looking at houses in Washington and Oregon right now, actively. It's on my very, very short list. Oregon and Washington's on my very, very short list of places to buy. I'm getting ready to buy, so I'm not there yet. I'm waiting for that fucking for the housing bubble to fucking implode. But when it does implode, when these old fucking people, if you're old out there and you feel like you're going to get ready to sell out those houses and crash this market, I am ready to fucking buy, baby. The moment you and your friends in your neighborhood start fucking putting for sale signs up and your neighborhood pricing plummets, I will be there and I will be living. More than likely, high probability, I'll have a home out in Washington or Oregon. There's not guaranteed, but a high probability. There or Destin, Florida. Destin, Florida. Possibly Georgia as well. That's on my short. Those are my 3 places. my short list for whenever this fucking housing bubble blows up is number 1 is Oregon, Washington. Number 2 is Destin, and number 3 is the Alabama, Georgia coast, somewhere in there. Yeah, I'm looking for if you're in your home right now, I want you to go outside your front door and look on your street, and I want to see 1/3 of those houses with for sale signs. If you see that in your neighborhood, you expect me to move near you. Because I'm ready. Yeah, I've got Apple on the list. I've got Apple right here. We're gonna chart that one out here. I'm just banging my way through it right now. As a matter of fact, I've got PayPal next, and then Apple after that. What are you guys gonna get dressed up for? Are you guys doing anything for Halloween? Like, I got all kinds of plans set up. It's like, you guys ready for Halloween? You ready? Halloween, I'm going to a thing called Greenfield Village. Let me tell you my weekend plans. Go to a place called Greenfield Village tonight with the kids. Get the kids outside, run them around, do all that craziness, right? Then after that, after Greenfield Village with the kids tonight, I have an announcement for you guys. So I have an announcement for you guys as a group. So number 1, hold on here. Number 1, you guys know that you guys know that I talked about getting a sponsoring a fighter, a boxer, for Trade the Trigger. So we are sponsoring a professional boxer making his professional debut, legitimate sanctioned boxer. He's going to wear the Trade the Trigger shorts, boxing trunks with Trade the Trigger embroidered on it. He's a young guy, great fighter. Trains at a place like a local boxing gym in Detroit, and he's like my Rocky man. And he's like he's a nice guy, great attitude, great personality, doing the right thing in life, and I caught a shine to him. So I really like this guy, and my friends all like him, and so I'm going to see him fight this evening, a sparring match late night tonight before his professional debut. I'll have video for you guys from his sanctioned fight, I believe on November 2nd or 3rd. So this whole community, you guys pay for that stuff, right? You guys know that, right? So any donations you guys have, so it's a couple things update here. So any of the donations you guys have ever given pays for that kind of stuff. So you're going to see this guy with basically our whole trading group is going to be represented by this guy. So I'll have video for you guys on that in the next coming week or two. So I'm going to go see him spar tonight, late night, and just see how he looks and make sure that this is the right guy for us. And he was in a fight last week that I missed, but he fucking destroyed this other guy. So I want to see him win. I want to see him win and have some kick-ass video for us. Oh, should I write that? Stonks on it? He still hasn't had the embroidery done. I was going to do tradethetrigger.com, but do you guys think we should do something different? Because I can have it say whatever we want. You going to Vegas? Fuck yeah, Vegas is great for Halloween. What else? How about this? What's some of my favorite places for Halloween? New Orleans, Vegas, and then the other one would be West Hollywood, another great place, a great town for Halloween. Park City has a great Halloween too. Actually, Santa Fe has a great Halloween too. Some really good Halloween destinations out there. Sir, when Santa Rally? I'm in the Santa Rally right now. I placed my trade this morning, so we're gonna have to fuck around with that for the next couple months, right? So that's what I'm doing for Halloween. Then I've got a thing called we're going to an apple pumpkin and cider mill on Saturday with the kiddos, and then we go trick or treating traditionally. We live in a place called Indian Village. I don't know if you know where Indian Village is, but it's in Detroit. And so we do a big trick-or-treating thing in Indian Village on Tuesday. I appreciate it, Ian. I will let you know, man. I'm just waiting for people to start selling their homes. I'm not paying the prices that people are asking for homes right now. I just refuse to. No, I'm still on here. I'm on into the close, so I'm going to hold this here. I'm not selling anything here. I'm still sitting here. I'm still just sitting here in calls. All right, so I'm going to get back to what else? Yeah, so I got a busy weekend ahead of me. You guys dressing up? You guys not dressing up? I got a costume. I've got this this blue jacket and then some vampire fangs, and I've got some gloves for my hands, and I was gonna get contacts, but I didn't get contacts this year. And then I've got a banana costume. My daughter and I are gonna do the gorilla and banana costume together when I go out with the kids. SmackDown coming in. Yeah, it looks like they could squeeze it down here, or they could have a liquidation break down here. Let me see what it says here. You've got a target down below here of, if you're looking for the break to the downside, you're looking for 408.11 for a break right here. 408.11 is the target below. No, hold on a second here. Put that up there for you. If you're looking for that break right here, this bloodbath or something like that, it's right here. right there. All right, let me do. I'm gonna do PayPal next, and then we'll get to Apple after that. And show you guys that there. So bearish, personally bearish on Airbnb, and I want to see Airbnb get repriced. I don't want to see. I don't like the Airbnb just like is $100. You're telling me Airbnb is gonna be $200-$300. I'm gonna say no. I'm gonna say no. You're never gonna see Airbnb trading $200-$300. So I would feel more comfortable trading Airbnb between 20 and 50, and then having great news out of Airbnb. Having great news out of Airbnb on those highs, right? You get a great report from Airbnb. They trade $50-$60. There's not a ton of innovation coming out of Airbnb. I don't expect a lot of innovation out of Airbnb. So I am pretty bearish on them. Like just fundamentally bearish on them in terms of what they're doing. I don't see any room for them to create anything that's going to be new and interesting and crazy. PayPal sold out of that a long time ago. Got out of PayPal, thankfully so. So I don't have any holdings in PayPal any longer. PayPal bearish, bearish all the way down to 43.43, 42.99, and PayPal's selling off currently still. And they are doing exactly what they're doing exactly what I want to see Airbnb to an extent do. So price target on PayPal, $42.99. Bearish on PayPal. Their ER is on Wednesday. I would be willing to buy them down there, though. So bearish on PayPal into their earnings report. And I'd be willing to buy PayPal at $43, possibly $50. Well, they're at $50 right now, but yeah, $42.99. So I'm going to set an alert. If you're watching the chart down below, this is PayPal's ticker here. Price target $42.99, and I'm going to set an alert on this ticker too because I want to buy it. So I set an alert for PayPal at $42.99. I'm going to set another alert at 46. Two alerts down there. I like to see this. I like to see PayPal come back down to reality as well. PYPL. Expected move is 8.9%. And they have a target of on the options. The options market has a downside target of 46.19. So they're right in here too, like right down in here. Let me show you PayPal. This is a 30-minute chart. I'm looking to buy this down here. And I think it's great. It'd be a great dip buy down here. So I'm bullish on PayPal if they can tag $42.99. $42.99, want to buy PayPal. $42.99, bearish. Dip buy. Apple. We're going to do Apple next. You guys have been looking forward to Apple. Apple has an implied move of 4%. Ooh. Hang tight here. Let me look at some stuff here. This is the one that really matters, right? Nope. I will say this about Apple. It tends to follow its direction. So I need to make that known about Apple. And now Apple's got a sign of approval to buy. It's in a bull wedge right now. It's still on trend, believe it or not. I know it sounds crazy, but it does have that cross above, that bearish cross above. I'm bullish on Apple here. Yeah, I'm bullish here in Apple. Or I should say I'm neutral. I'm neutral on Apple. Check their 30-minute. No, I'm bullish, dude. I'm bullish on Apple here. I'm bullish on Apple here. Yeah, I'm bullish on Apple here. If Apple does have a bad ER report, it's going to be ugly. Price target 156. There is something to be said for more downside continuation, or take the money and run on Apple. Well, I'm going to get rid of all this here for just now. I'm bullish on Apple on their ER. Expected move. Tired here. Long fucking week. 4%. 174.41. Oh yeah. Yeah, I'm bullish on Apple here. Bullish if Apple can get above 167 and hold it. If it can hold 168.17, you're likely going to get pinned in next week, but I think you get the 175 on it. Let me check some stuff on Apple here. I'm bullish on Apple here without a doubt. Feel the market has turned its back on Apple, says CIC as well. Malcolm Etheridge. Nah, I don't believe that. Look at this. I don't see it on the daily here. Let me look on the daily. Maybe he's right. No. That already happened. You got the bear plane there. You got the bear plane there. 1, 2, and 3. Though I do think it's sell the news. I think that's fancy thinking. So I'm bullish on Apple into next week. I'm interested to see where price is on Wednesday. Let me check the 30-minute here. Yeah, I'm bullish. I'm bullish on Apple. Let me take a look. I got to look up one other thing here in Apple. I read that one story on our article. So you can read this other. See what they're saying about Apple here. Bank of America reiterates Apple as neutral. Bank of America said that it's standing by its neutral rating on the stock. We maintain our neutral rating on Apple as positives of new products are offset by risk of weaker consumer. I'm going to go with squeeze to 175, and then you can get your weaker consumer afterwards. I think they get the beat. They get the 175. I'm bullish on Apple into their ER. You've got some real danger to Apple in the long term, but I am bullish on Apple into their ERs. Price target into Wednesday at some point 175. I'm going to go against that estimate, but I do think that profits are taken on Apple. So Apple upside expectation into Wednesday 175. It should be a solid news type event. If you're not already in that trade to the upside on Apple, do not try to get into the trade afterwards. So when Apple reports, if they do have a positive earnings, I would not try to get long on Apple afterwards. I think they're going to take the money and run on that trade. So upside target 175. Then a continuation to the downside on Apple. So Apple, I'm going to write neutral here. Bullish into ER. Sell the news. Next, Starbucks. Starbucks. They got a pretty mixed bag here. Bearish, neutral, bearish, 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 neutral right now. It's not looking good here. I'm getting pretty bearish on a lot of these tickers. I guess I'm kind of bullish on AMD. I shouldn't say neutral, just say bear or bullish. Let me see what I am right now. I'm bullish on Apple. I'm bullish on AMD. Those are the only two that I'm bullish on right now. They are big drivers, but let's see what Starbucks is saying. Yeah, man. Starbucks, I'm bullish or bearish on this one too. Man, you know what? Some of these reports that are coming out this week are looking like they're just begging for dip buys. Looks like someone wants a better price. Yeah, that's what Starbucks looks like too. You know, it's some of these tickers I'm looking at. They don't necessarily look. They look bearish. They look like someone wants a fucking cheaper price. That's all it looks like. 30-minute chart's not bullish, even though it's bearish today. 1-day chart. Starbucks. I fucking hate Starbucks. I do. Starbucks price target $75. Yep. $80. 30 minutes. Where is that fucking where is that? Starbucks is in check out Starbucks here. I want to see what the expectations is on this report. Trading $92. Starbucks set to serve up strong earnings growth for Q4. Yeah, they do well in November too, don't they? They tend to do well-ish. I'm gonna go with the downside move on Starbucks. Let me look again. I mean, they're better buy McDonald's versus Starbucks. These two retailers that could beat their earnings. Why they should not be. Everyone's bullish on it. Two NASDAQ 100 stocks that are surefire buys. Will Starbucks beat estimates again in the next quarter? Let me see here. Yeah. Any guys like Starbucks? I'm not liking Starbucks here. What is their expected move? 87.65. I bought the dip. I'm sitting on some calls for the close, and I've got 15 grand in call spreads right now. Okay. Let me Starbucks weakness into Monday. Man, that is good. Dude, they're fucking trying to pin this shit so hard right now. I'm bullish on Starbucks. Okay, so I'm weak. All right, so here's the deal. Starbucks, I'm weak into early next week on Starbucks, down to 91.48, possibly as low as $90. But I'm bullish on their report on SBucks. They report on Thursday, but I'm looking for a bullish report on Starbucks. I'm bullish on Starbucks. I think you can trade $90 on Starbucks, but it's going to $98. I'm bullish on Starbucks. So bullish, finally. So my main drivers here, like AMD, I'm bullish on. Apple, I'm bullish on. Starbucks, I'm bullish on. So that's a good sign, at least. These are the market makers here. I'm looking at Shopify right now. You know what sucks about Shopify? You know what really sucks about Shopify? You want to talk about a company that has underperformed, like or underperformed, under even its high. So its high was 178. You want to talk about a company out there that has missed it? It's this one right here. You want to talk about a company that has still so much potential. Yeah, no worries. So this morning I put in my holiday trade, my Santa Rally trade is in. I've got a $714 December 29th, 420, 440 call spreads on for the market. And then I've got some calls right now. I've got a bunch of calls right here. I bought this candle right there, that exact candle. As that candle tapped right there, I bought that. So I am long into this close on calls here. We're just bouncing around right now in that half-hour trigger. So I'm playing close your shorts in the last 45 minutes of the day with shorts. So we can try to get a trade in for the day. Keeps going up and down, bouncing around. Now, Shopify we're going to talk about. This ticker here is probably the most frustrating ticker for me that I've ever experienced. This company has squandered having the ability to create a marketplace that is simple to beat Amazon. And they've built the infrastructure for distribution centers, shipping, and I am completely mind blown as to why they have not destroyed or crushed Amazon at this point. Now, saying that, my God, saying that about Shopify, you have to think about the fact that Shopify is a good example of market making, where it doesn't matter how good a company is or how good a company could become. Shopify is a fabulous, wonderful example of market making. You know, they opened up at $1.84. That means that it doesn't matter how great of a company they are. The price of the ticker doesn't matter. That it can be repriced. So you've got very wealthy people that own it at $2, is my point. So I guess you could say, yeah, that's high multiples, but you know, every ticker starts out at fucking $2 in private. So it's trading 46.28 right now. I would really like to own this. I would really like to own this stock for my kids in case they ever do that. Shopify could grow into that that Amazon killer. But you know where that price is? It's like $10, $20, something like that. Their low in October of 2022 was $24. So we know that buyers stepped in October at $23.35. Oh, what a waste of what a waste. This is like accumulation, distribution, buyers here, buyers there, and these buyers are gonna be down here. So I expect blood into their earnings. I expect blood into their earnings. And they're going to try to run this up again. I'm going to set an alert on this company, too, because if they bleed off into their ER report, I might want to buy some calls into the close or buy the underlying. I'm going to set an alert on this company, too. Shopify should explode, dude. If we can get more bearish into their ER. Yeah. Checking their prior reports. Prior reports down 5%. Their last report. Report before that up 23%. Prior to that down 15.8%. Prior to that up 17. Prior to that up 11.78. Whenever they're going down, they seem to go down. Whenever they're going up, they seem to go up too. There's a lot of that here with them. So what's their expected move is 9.5%. Let's look up shop. See what the analysts are saying on it. My boy Jimmy Kramer saying wait for it to come down to buy more. He said that on October 10th. Shopify AI is the new third-party seller. You're among the millions of Americans just purchased on Amazon today. Yeah, I know that's AI. Seller, some company invests in wholesale site. New stock launch. Let's see if I see anything in here. Let's see what they're saying here. Yeah, no. Give me a second. I got to look at Shopify a little bit closer than expected. How do you like the Shopify at $11? Do you like Shopify at 11? Probably not, right? Probably don't want to hear that. Bye, 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 bye. When did they make that meteoric rise? 2018? 2019, 2022. Still has more down to go in the weekly on Shopify. I'm bearish on Shopify. Over long-term bearish. Long-term target Shopify. Long-term target Shopify $11. Their their ER. I'm bullish on their ER, but I am bearish on it as a ticker. 5071. Two targets for Shopify and their earnings: $52 and then $53.19. I'm bullish on their earnings, but I am bearish on them. I'm bearish on them and their long-term pricing. I want to see. I want to see winter weakness, and I want to see them at like $20, maybe $10 in springtime or fall. I want to see Shopify get repriced. I don't think I got the $11, but I do think the 30 is on the table, like $29.66. 22.35 is on the table as well. Now, if Shopify proves me wrong and trades above $55, we'll have that conversation. But I think any kind of strength in Shopify is going to lead to some capitulation to the downside. Check this one more time here. Let's see what this looks like here. $16.41. Yeah, it's going to go on the decline. I think Shopify gets a repricing event overall. Bullish on earnings. Just another reason to sell it above at 55, 53, stuff like that. So bearish on Shopify. That's on Thursday, by the way. Currently extremely bearish on Marriott. To 153. Long-term Marriott bearish. 150 is going to be my target on it. Check it really quick. Yeah, 150. Bearish on Marriott. It's being someone's selling it. Even on that last high, they were selling it. 30-minute trigger. Let's see, Marriott. I'm bearish on Marriott. I like Marriott a lot. I like that company. I like staying at Marriott's. Plus or minus 5%. They're not expecting much. I like a year out put spread on this company. %, implied move, 193.89. I guess I should say I'm bullish on them on their ER, but bearish on them overall. I'm pretty fucking bearish on this company. Okay, so Marriott, I'm bullish on their ER, but bearish on them as a company. Look for a chance to put a put spread on them at 194.02. Bullish ER, bearish stock, bearish long term. Marriott's likely going to get repriced down to 150 bucks, easy. 165, and then I've got 150 as the lower price. Bullish on their ER, at least for a squeeze. Okay, so I've only got a few more left to do. 1, 2, 3, 4, 5, 6, 7. 2:31 in the afternoon. In the next half an hour, I'm going to try to get some of these tickers done for you, so that you have them for next week. I think I'm gonna do just Palantir, SQ, and try to get those two done. And then I'm gonna give you an expectation for next week. As the weekend is coming, it's almost 4 p.m., so I'm gonna be done by 3 p.m. so that you guys can have an expectation of what to expect in the next week. And then we'll go from there for the close today. So I'm going to do just PLTR and SQ at this point. I'm going to go back through and give you an update, and I'll try to make a post on the internet if I'm bullish or bearish on each one of these tickers. I'll do like a written post of some kind. PLTR trading $15. Woof. 124% on their IV for this next. Damn. PLTR. Bearish, if you want to know. Not even getting there, I can tell you I'm bearish on it. PLTR, downside expected move, 1332. I agree with that assessment. PLTR, hello, my old friend. The run started at $7. I'm going bearish on this one, 1332. I agree with that trade. You're going to see people try to buy it. There's going to be a trap here for bulls. Expect bearish report on them, and then some kind of relief rally. And I think you're going back to $7.50. I'm bearish on Palantir. I'm bearish on their ER report. I'm bearish across the board. You're going to see Palantir get back down to $8. That trade is over. SQ, and I can see you guys are trying to hold on to that trade, and they're just selling right into you. SQ. Be wary of Palantir, okay? I know you guys love so I want you to know something. I like PLTR. I like PLTR. They have too many fucking stocks, too much stock out there, and they don't have a handheld. Like, if PLTR could ever announce something, anything, that could keep their name common, they would go to the fucking moon. What is this, Cap? Trying again. Adjust data for dividends on or off. Trade the trigger. I normally leave dividends off. Dividends off. Extended hours on. Extended hours on. Dividends off. Do I have it off right now? Hold on, let me look. Do I have it off right now? I'm not paying too close of attention. Yeah, these are earnings calls, not direction today. If you guys want to trade Shopify, if you guys want to look at Shopify today, we can. But this is earnings calls. Like, are we going up or down on their earnings report? I want to clarify this with you. So this is their earnings report. Expectations. Do they squeeze up or down? Up or down? Up or down? Not like, what are we intraday trading Shopify, any of that kind of stuff. You want an intraday trade or chart out Shopify, I can. But I haven't charted them out like if we're above the hourly trigger, dip below the hourly trigger, previous pivots. I haven't charted out any of these tickers in that concept in any way, shape, or form. If you want me to go in and like chart out an intraday Shopify, I can for you. Palantir, I'm bearish on. And not only am I bearish on Palantir, till you get yourselves like something where Bob on Main Street, Bob in the basement knows about Palantir. I guarantee if you go to your mom and dad, they don't know who the fuck Palantir is. They have no fucking idea. And don't be showing me that shit about the AI battlefield maps. I'm telling you, man, I was in U.S. Army Command. That shit looked like dog shit that they showed. That little thing was for you, not for the military to actually use. I would be afraid for my life if I used some of that programming. In if S2 used that stuff, I would be scared shitless of that stuff. So that stuff is not near implementation. I don't know if you know much about U.S. Army Command and stuff and war planning, all that kind of stuff. But some of that shit they were showing is hella dangerous. So, anyways, Palantir needs something that everybody knows about. They just need something out there that everybody knows what Palantir is. Otherwise, we're going to retrace that entire trade back down to $8 and start again. So Palantir, bearish. Overall, across the board, bearish. Look for a dip buy at $8 or so. SQ. Oh, my boy, SQ. SQ is like Snap. SQ. Bullish. Wow. Can't believe I'm saying that. Let me look at it here. Man, dude, this shit needs repriced too. Like, this stuff still needs a repricing. Okay, so I'm fucking bullish on SQ. I can't believe that I am. I cannot believe I'm bullish on SQ. Okay. I'm bullish on SQ. I shouldn't be, but I am. SQ is my favorite play so far that I've looked at for next week. Of all the trades for next week, SQ is my favorite trade. Currently trading $39.95. If you get any chance to buy $32, I'm going to set an alert on this bad boy. Buy it. $32. You get any chance of buying SQ, it's a buy. And not only that, I want you to know that there's some accumulation going on SQ. I don't know why that is. I don't know why it's being shorted into the ground. It's got to be some kind of function of trying to get some capitulation. But with that being said, I am a buyer of SQ. I've got an alert set right now for it for $32. $31.76. Whatever weakness you see, keep that one on your what's going on here? Are we squeezing? Are we squeezing? Everybody's short here, right? That's what I was told. Everybody said they were short here. SQ. Remember Netflix when I said to you I'd like to see Netflix trade down into their ER, and then I was bullish on their actual ER? Remember when I said the same thing on Misfit? Like, can you get a cheaper price on Misfit so you can own Misfit? Both printed, right? 2 fat prints. That's SQ here. So SQ has the ability to trade like depths of hell into their ER, and then like 3:45 in the afternoon. When the fuck are they reporting? In the morning or night? Is they report in the morning or the nighttime? Where the fuck is SQ at? They're a Thursday report. So I'm bullish on SQ. Like SQ is that same ticker. If they can ram it down to $32, or like just even if it's like the last 15 minutes of SQ before they report, if you catch that $32, it is a fucking buy all day long. Okay, buy all day long. So that's my, if I have one I'm looking at next week. There's a few I haven't done. I haven't done Lilly. I haven't done S&P Global. I haven't done Myrna. I haven't done Rocket or Rocket Lab, Rocket Insurance or Rocket Lab. But that's my favorite ticker right now. Like that one right there is just begging to crank to the upside. And the reason I'm telling you that is because on higher time frames, it's being accumulated. Someone's buying it. So all you guys don't understand this about me. A lot of my trading revolves around. There's some fundamentals there. There's some technicals there. But the accumulation of distribution by market makers. So news or stories, outside of fraud, none of that shit matters to me. I think it matters, but it doesn't. And if there's ever bad news on a company that should be going up, I look at that typically as, hey, an opportunity to buy that company based on someone else wanting to jump on that run. So like Meta, the suing of Meta this past week was, to me, just an opportunity to buy the fuck out of it at 83. So for that stuff to drop when it dropped, for the news to come out when it came out, and then the expectations out of Meta looked to me like someone wanted in dirt cheap while you were most fearful on that ticker. So Meta to me was a buy. SQ, same situation. SQ, I don't know what's going to happen or whatever coming into their ER report, but I think it's on Thursday. If you could see any weakness in any kind of weakness in SQ or buy it at 32, buy all day long, because somebody else is buying it right now. I don't know who's buying it, but somebody's buying it right now. I don't know why they're buying it. I don't care what the news is going to be. I don't care what comes out. I don't care what's said. I don't care. Like anytime people come to me and they go, oh, did you hear? Like the other day, someone was like, dude, Meta was sued by 43 states. I'm like, did it go lower so I can buy it? I was looking for a dip buy already. I'm assuming somebody else was with more money than me that made that happen. So, or it was already pre-planned for this to happen while they got all this other shit coming out. So, it doesn't shock me when that news comes out. So SQ, keep an eye on it. Has a lot of potential for a great dip buy. Okay. Yeah, Camelo, I was asking about you earlier this morning, man, hoping that your family was okay. I wanted to ask about your family, if there's any way for them to get out or not. So we've got let's see. One quick second here. Oh, you guys already know that I'm playing. What am I playing with right now? I'm playing. Playing Close Your Shorts in the Friday Close is what I'm playing. What else are we gonna do here? Okay, so so far I haven't done S&P Global, Lilly. I haven't done Myrna, Rocket, or Rocket Lab. Whew. But I've got them all done. I've got all the major reports done for you next week. So we're done. Swipe my hands right here. Did my job for you this week. We're going to talk macro, well, not macro, but short and medium term on We're going to talk short, medium term on SPY right now. Oh, fuck yeah, baby. Making a bunch of money here. So here's the deal. We need to talk. We have to talk. Because, give me a minute here. I need 1 quick second here. You know what? Hold on a second here. Give me a 5-minute break, okay? It's 2:45. Give me a 5-minute break. We're gonna come back and chat. We have to have a fireside chat here. That's a little overdue because I have a tendency to not do it. I have a tendency to not say what I should say and biting my tongue. So we're gonna have a chat before this close today. And it is Friday, so I'm going to thank people for joining this week, becoming a member this week, all that kind of stuff. Anyone that supported the show, I'm going to thank all of you people this week. So we got a bunch of talking to do here. We're gonna have a little fireside chat. So I'll be right. Give me 5 minutes. We'll be right back. I'm gonna go potty, and I'll be right back with you guys. I watched the tape. I'll talk. We can talk about watching the tape, but I do watch the tape. The tape is right there. Tape's on the screen, man. Hey, bullshit. When I get back, we'll talk about the tape too and when it really matters. Trader Podcast, I got to talk to you over the weekend, man. I need to have a chat with you when you have time. I got to call you or something. I got to chat with you, brother.
Jordan's foreign minister, apologies, says Israel just launched ground war on Gaza. The outcome will be a humanitarian catastrophe of epic proportions.
All right, hold on here. Okay. Let's go to, we're going to go to the triggers over here. So here's SPY right here. We're going to switch this out to a 30-minute here. Whoa, that's loud as fuck. Let's see if we can, we're going to do some market awareness here, okay? So I said we're going to do a little fireside chat too. We're going to do a little talk here. So that we have to do some correcting here. I saw some commentary yesterday in it was really bizarre. I saw a lot of I keep seeing commentary, and I saw it in the chat briefly yesterday. And I saw it briefly yesterday and said something about bulls being caught with their pants down. So way, way, way back here. This is back on July 27th, right? Just want to be clear here that we called this correction right there on that weekend. This is actually a weekend we made videos about expect a correction, right? And we expected this correction. Matter of fact, I'll show you the video here if you want to see it, because we did make it public. We put it in the Discord. But I just want to make sure that we're clear here. No bull was caught in this correction. Not in our trading group that I know of. We ended up knowing that we were going to get a correction over here. And we knew that it was going down to somewhere along that 430. Now the issue comes into play somewhere down here. We ended up trading 428 somewhere down here. 428, 420. Now this next leg down right here, definitely not part of the plan, right? 420, not part of the plan. Excuse me, 424, not part of the plan, and then definitely none of this part of the plan. This part of this correction right here, the only thing that I would say on this part of the correction would be that we did note that this isn't even corrective, right? Hold on here. So this isn't actually a technical correction. I'm going to get the measure on this. So from this peak down here to this trough down here, you remember when we went over this and said, it's 6%? You know, not even technically a correction. You need more for a correction. So no corrective behavior here. Now, all of this crap that's been going on down here, definitely not anticipated. Wanted a touch and go for end of quarter. For end of Q4, has not happened. We've rolled down and into the center strike of the SPX JPM collar, running right down into it. That collar, I believe, is at 4005, and it's like a magnet below us at this point. But we have had indicators that we are going down. So you can actually see this last bear plane, and it has not changed. I want you to see this here, how it says bear plane right here. And whenever these come up, it tells you when we're bullish and bearish and when to take stuff off. And you can see that major cross right here, this bear plane that took place back in October 18th for this next leg down. And what's fascinating about it is that spec growth stuff, I ended up exiting all that spec growth stuff, but not the Dow Jones Industrial stuff that I owned. Most of that stuff is printing right now on their ER reports. The troubling thing here is we talked about threading the eye of the needle, and we failed to do that last week. I made some posts on Twitter where I said the bulls need to thread the eye of the needle and escape this daily and weekly and begin to make their way higher to escape danger, right? And they failed to do that. They failed to do it here, and they failed to do it here. But it's the bizarre part about some of what was said yesterday is that there's no bulls in here that are feeling safe or feeling like they can buy the market. And even in all of this action, none of this is bullish unless you begin to make your way higher and take out previous highs on these higher time frames. Now, what this has led to in the market, into the marketplace is something very dangerous to the market that wasn't here until yesterday. And this is where I get really concerned here. This is where my concern comes in to this market. I need to explain it to you in a better way. I don't know how to explain this better to you. This market as a baseline goes up and to the right. Whether you believe that or not, that is the truth. Number two, with that being said that this market goes up and to the right, I can't count on my hands the number of times that a bear will come out or a seller or the loudest voice in the room will come out and say, I told you so. I told you so. We were going to crash or correct or whatever. Now, I've put out one correction video. Well, I put a series out of 3 or 4 correction videos. They all started on up here, okay, on this high back here. What you haven't gotten from me is expect a correction here, 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 here. You know what I'm saying? It's like you're wrong, 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 right? The one time you're right, you say, bulls didn't see it coming. But bulls did see that correction coming. Do you get the point that I'm trying to make here? So the idea here is that we gave you an alert of the correction coming in the marketplace. And so often you'll hear people say we're getting a correction. Do you guys remember when Mike Burry made that prediction 2 days later? He just did a victory lap today or yesterday on that correction call. And he called that 2 days after. Matter of fact, in that video, I said, expect guys like Mike Burry to come out and call for a correction. So the idea here, the idea I'm trying to point out to you here is that I hear these weird things from people saying, they're right, they're right, they're right, they're right. But these same people are calling for corrections here, 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 here. You know, it's like 1, 2, 3, 4, 5, 6, 7, 8, 9, and then you finally get the one that works, and you called it right. You can't be right 1 out of 12 times. Does that make sense to you all out there? Now, in this corrective move that we've had here, there's more danger here than it would seem. And so I issued you yesterday not just a corrective warning, but now a crash warning. And the reason why I'm telling you this is, and someone said yesterday, I told you. And what you can't do is you can't issue those, we're going to crash or we're going to do this, we're going to do that. If you do that 12 times, you're going to fail at it, right? The one time that you're right, you're going to be right. You need to see the confirmation of what's taking place and then say, hey, this is the warning. This is the confirmation. We're going up or down. This is up or down. Doesn't matter if it's going down or going up. And so what I want to talk to you about here is this cross above. And just like this correction back here, right? And why didn't you call a correction cap? Why didn't you call a correction here, 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 here? Is the same reason why you don't call for further downside to come over here in this correction. Does that make sense? You need to see not only the price action, but the indicators tell you to be afraid. So this cross back here on SPY, where this daily trigger is crossing this weekly trigger, is extremely bearish, extremely, and very dangerous to the marketplace. Not bullish in any way, shape, or form, and it's giving you a warning. This cross right here is giving you a warning. It's telling you ahead of time that there is danger in the marketplace, plain and simple. And there is no danger in the marketplace until that cross happens. There's no danger back there. There was no danger down there. There was normalized markets. And even down here, this has all the signs of a normal correction, not a crash. And you shouldn't take it as such or one until you see that cross up here. You'll hear that cacophony of faces and noises and speaking and all of that. Even if price was to drop, but you did not have the cross and price, hold on a second here. So let me give this in a better, let me explain this even better here. If you didn't have this crossing of the orange and yellow, and that's not there, right? If you only had price cross down, and then it bounced way up and escaped this cross down below, right? If it just escaped, there still would be no risk of, or major risk to the market. No major risk to the market without that cross there. But with that cross there is a problem here. There is a major issue inside of the market. Now, it can resolve itself to the upside. SPY can squeeze back up and carry about its merry way. It can do that. Right? You can do that. We can get price back up here and continue on our merry way to the upside. But bulls are not in charge of this market in any way, shape, or form. Bulls need to know that not only do they have a lot of work ahead of themselves, but they likely are in some high danger. Now, that high danger that they're in should give them, anyone that is long, if anyone is long this market from up here or over here or anything like that, they will still be likely given ample opportunity to exit the market, okay? Exit the market or reposition the market. And even saying that, you might say to yourself, well, Cap, this is really bad here. They still need to confirm that cross with price on the way down. Now, let's say we squeeze up here to this 429, right? So we squeeze up here to this 429. We'll just make it green. We'll make it. We'll color code it simply for you, right? Let's say blast down here. You're still going to get the squeeze up here. Is my point, and you're actually right back to this zone of where the original correction was. So there's not really too much lost if you exit the market in an orderly fashion to the downside. Okay, so there's a couple points here. You've been warned, right? You have warning here of a market being very dangerous now to be long in. And that's from this cross above. Saying that, there is a very low probability that we blast down here and do not come back up to this cross or this daily trigger at some point. At a minimum, you're going to see this market oversell and squeeze back up to this daily trigger. It's got a probability of about 80%. It's that high that we come back up here to this daily trigger. So be aware of that you will be given opportunity and ample opportunity to escape whatever this is back over here, okay? Whatever this sell action is up here. Now, saying that, what does that mean for more downside to come? What are the implications here for sellers? Sellers are in charge right now, and all they need to do is sit up here and wait to sell this next leg down over here. That's usually how the market goes, okay? So you have the warning right now. It doesn't mean we're going to crash. It doesn't mean that the market is in full doom or that anything is bad. And myself, I'm not going to become a bear unless, like, if you want to see a bear suit, it would be with price action just like this right here, where you get the rejection off the cross and we start heading down. And I am going to be trying to positioning myself short here for that eventuality. Whatever this price comes up here to this daily trigger is where I'm going to be looking to get short heavy into spring and fall. Excuse me, spring and late winter and early spring is somewhere up in here. Now, if we don't get up here and roll down, if we don't get the bull plane again to go to the downside, no harm. If we start to trade up again, we trade up here and we get above and start consolidating, heading higher again, no problemo. But if we get that bear plane up here again, it's going to be messy to the downside. And you need to be aware of it because you should then get extremely, extremely bearish. This is the door closure here for bulls. Okay, this is, if bulls had a door being closed on them, it's right here. So if you were to write door closure right here, close the door on bulls. It's right here. There's a door closing the door on them and an eventual real true crash. You should see a monster nasty event after this. Some kind of disaster here for the stock market. I don't know when or how that happens, but if there is a rejection, here, you are going to expect this market to roll down hard and heavy, brutally to the downside. And you need to be aware of it as a bull. As a buyer of this market, you need to be aware of the importance of this one specifically. This one, not important. This one, not important. None of this is important. None of these corrections are important. This is take the money, take your profit, and run. And as a matter of fact, the market is still up on the year. So we're not red on the year. There's nothing negative here. If you go back to October, when we got long, we're way up on the October run. So all this structure in here, you're still being given opportunity to get out. But I'd have to make it very clear to you out there of the danger here. This danger is not the same as any of this danger. If you squeeze up here, right, you're still at these levels that we had prior to any of this corrective action. It's this door closure here where things get really, really spicy. You really start to put, someone asked earlier, do you watch order flow? If you see this rejection here, if you see that rejection right there, right? You see this rejection right here. This is where your order flow is going to matter. This is where you're going to see your cascading sell the market triggers that you're looking for. When you see, I saw people saying this is like Black Monday or 1987. 1987 was one day straight down to the depths of hell. They couldn't even make a market on it. This is at best a correction at this point. It does not fit the bill for a crash. It is in no way, shape, or form that, but it can become that. And it'll be violent to the downside. Like we're talking straight down violence in this market if you get this corrective action here. Now, one of the dangers heading into next week, let me delete this really quick here. One of the dangers here, let me see if I can go to SPX really quick. $405. This is where the JPM collar is, 4050. Right there. So this is SPX. So let's say you have more blood down here, right? We squeeze back up here. This is really the trade that's nasty right here. Let's make this white right here. Oh, no, 1.4 points. Hold on a second here. What is going on with this thing? So I'm not really too concerned with if we bounce off hourly trigger. I'm not really too concerned with the bounce right here, but I'm mostly concerned with this action here. This is where things get really bloody. So you start heading down into that 350, and you start to get real nastiness down here. So be aware of this cross up here. Stay focused on this cross. It is important for you to pay attention to what happens up here. Any of this action up here, any kind of rejection up here, currently sitting at 4302. Any of that corrective action down here, any rejection up here, get scared. When we're down here like this, I'm not scared down here. When we're down here, I'm trying to buy a dip. When we're up here, I'm trying to take the money and run. So take the money and run. Looking for a dip to buy down here. Does that make sense? Not trying to sell this. Not trying to sell that. Trying to sell that. Does it make sense? Trying to sell the new high up here. But not trying to sell this stuff down in here. Not trying to sell that. Not trying to sell this. Like bearish, starting to get bullish, starting to get bullish for this upside move. Now, saying that, with this cross right here, instead of trying to buy this dip and thinking, yeah, it's going to recover to the upside, right? It's okay. And so instead of saying, yeah, we're going to buy this dip and we're going to continue up here, it's, we'll buy this dip, but I'm not buying and putting any money in this market. Does that make any sense? There's no like confidence in this market. Zero confidence here. Does that make sense? So zero confidence in the market with this cross, and buying this dip is with low confidence of going up here. There's confidence to here. There's just no confidence of continuation, V-shaped recovery to the upside over here. Like I have almost zero confidence in this here. Coming up here and then doing that right there for that inverted head and shoulders. I have no confidence in that right now with this cross here. Zero. None. Zero confidence. So this warning is in place. This warning does not come off on the market until it resolves itself. That would mean price would need to. That would mean that price would need to not only get up here, but get a new high, consolidate, and begin to make its way higher over here. Okay, so right now you're in bear mode or bearish mode. Actually, we could do it like this. Excuse me. Then you would do that break there. And this is where I get bearish. And I become bear, like bear suit, bear danger, Will Robinson. And we're going to go back down and we're going to trade that 3,500. Way down here, actually. We'll end up trading all of that. We'll trade at least 3,500, possibly even lower. So this is the concern, right? This is the confirmation if there's rejection, or put the bear suit on and start getting worried. If you want that major move down, that actual crash, the actual like bear markets, the actual bear town, or more than sell the news, any of that kind of stuff. This rejection right here is the one that you want to be watching out for. Now, why else should you be having concern with this here? I'm going to show you why right now. You should believe this is going to take place. And we're going to look at some of that stuff right now. So And my real cause for concern here is on SPX on market breadth, and more specifically on PMIs and PPIs. Now I have less hold on a second here. I have less concern. Is this? Oh, wait a minute. Hold on. MBI. Hold on a second here. So here's SPX right now, still on trend, right? You see SPX still on trend here. Has not broken trend from its October low, right? Still on trend to the upside. People don't like to use the October low. We're still in an uptrend on the daily. Here's SPX. Here's the channels. We have not broken upside trend. Take a snapshot of this. We have not broken trend. There is no break of SPX trend to the upside. Full pullback here on trend, though, is happening right now. Now, there's concern, though. And this is what traditional stuff doesn't show you. This is where that you have that cross of the daily and the weekly here, right? And the cross of the daily and the weekly is saying, we're sitting on this channel. You should buy it, but I wouldn't trust it, Cap. Right? It's looking for that bloodbath down here to the downside. And it's like, why is it looking like that? Why doesn't it just continue to have continuation to the upside? We already have the triggers telling us why. Well, here's another reason why that you should be not quite scared, but have some cause for concern. The first one here is this PPI, PMOs, excuse me. And I don't like seeing this PMO with no with this white not crossing to red to the upside. So this PMO is telling me no. This PMO does not have, wait a minute here. PMO is not showing me any kind of reversal at this time. See this reversal here to the upside? No reversal here in PMOs. And then PPO is saying the exact same thing. Hold on, we'll take a look at PPOs as well. I said PMI. Did I say PMI? I said PMI, I think, like 5 times. PMI is, PPO is saying the same thing. And you can see this bloodletting down below, and there's no reversal showing, is there? See that nice reversal right here? See this nice reversal right here? See this nice reversal to the upside? Nice reversal right here? And even a nice reversal down here, nice little relief rally, right? You're not seeing that yet here. I want you to see that. These PMOs have not yet turned around, right? Not yet shown any kind of, hey, we're going to start turning around here. And we're parked down here in this on this monthly trigger right now, and it's showing, maybe not. We keep going down, right? So this is my danger sign right here. This PPO is saying no bottom yet, Cap. And not only that, due to these new lows over here, look at this low over here, right? This last little bit right here, wham. This last little bloodletting, woof, straight down. So any kind of relief that you see, any kind of squeezing that you see is not to be trusted, is my point. Not to be trusted. If you start to see the market begin to squeeze to the upside, it's not a function of a turn in the market. Right now, it's more of a function of just squeezing for better positioning or more downside to come over that cross PMOs and PPOs. So PMOs, PPOs, and the triggers are saying bad news coming. This is not the dip to buy, or if you buy this dip, not to expect much out of it. You can expect that if you want and expect that, but likely more downside to come unless we have some resolution to the upside. So you can get above that 430. So the expectation here is any squeezing should be followed by rampant selling and more crazy downside to come to at least that October low. Excuse me. That's 3,800 to start with right there. But it doesn't matter. It's going to go down to we're going to hit the October low, and we'll end up hitting that 3,500 as well. It ain't going to matter because we're going to come back up here again and sell all this shit. We'll end up selling this up here, and then we'll end up selling all that to the downside over there. We'll end up tagging this one right down here, I believe. Yeah, right down there. Into February and April. So just be very careful here on this stuff here, on these continued moves to the downside, okay? Whatever squeezing this is, PPOs, PMOs telling you we're extremely bearish, not just oversold, bounce shit, but more like on this right here, this maybe something like that to the downside right there. So be very careful of all of this down there as time moves forward. Now, if we're gonna look at the JPM collar over here, we can change this out. We are coming into, this is the JPM collar for the quarter, and you can see we're trading that right now. We're trading that magnet of this collar, and we should bounce off of this collar and not print anything underneath this. Now, that's what we should do. One of the dangers here is we do have I think we have an example recently where we did trade underneath it, and this is where it gets super scary. I want to show you this prior example right here. This is May of 2022. We traded below, right? Here's that 48.85. You see the bloodbath down below, right? Come back up underneath it. And then we get into the second month of that quarter, and we're raining down, aren't we? All right, blasting down, bouncing back up, and then getting underneath. And look at this really quick. Right back up to the bottom of that collar. So things could get spicy here, couldn't they? Things could get spicy. We have an example of it back here. So this is that 34.20 down here. If they break below this and start holding, any kind of squeezing up here isn't going to matter, right? They blast us down here and then park it back up here for this close on December 31st. So there's real danger here into the end of this quarter of the push underneath and then the slamming down to that 3,400 and cascading. So I'm going to leave you with a couple things here. If we begin to trade this, right? Bad news ahead. Market crash. Okay, 3,420 is definitely on board. So that 4055 is a key number for you in SPX. If we catch the bounce off of this collar, right, and we still come back down here, same thing. Super danger into end of Q4. And that's where you get your crash from. That's how you get down to that 3,500. You can even go below it, believe it or not, and suck yourself back up. Now, is this going to happen? Is there like a 100% chance of this? No, there is not. Is there a 70% chance of this happening? No, there is not. You need the confirmation up here to make it like a 70% chance of this happening. You need to know for sure on that daily trigger and that weekly trigger cross, and that would ramp up a very high probability of seeing that 3,500, possibly even into the new year. So be aware of this as we come into this weekend, next week, into the second month of the fourth quarter. This next week is going to be very important. We have 30% of the market reporting this week, and the PMOs and PPOs, PPOs are saying to be very careful here of that happening. Now, myself, if you're going to ask myself, hey, Cap, what are you going to do here? Nope, hold on here. Are you buying this market here? It's very dangerous to do that here. The danger lies right here. The danger, wait a minute, did I get that right? Yeah, the danger lies right in this rejection point right here. This 4,300, 4,2,900 is the danger. and into next week. We're going to talk about what to expect next week because we got some danger with this daily trigger. And we're going to talk about that right now. We're coming into Wednesday rate decision, right? And you've got 2 days off, right? So we got Saturday, Sunday, Monday, Tuesday, Wednesday, and you're going to see sellers here trying to pin this market into this Fed decision, right? Park it, and if you get that bearish Fed, it's straight down. There's your rejection. If you get the dovish Fed, there's your squeeze to the upside. But be careful of this into Wednesday, okay? So Wednesday, upside target, 420, 422. And we're going to chart this out for you right into next week here for these earnings. And sorry, I'm getting some allergy stuff. I don't know what that's coming from. So here's your hourly trigger right here, right? Your hourly trigger on SPOOs currently sits on 414.18. So we got Friday, Monday, Tuesday, and Wednesday. This is the Jerome Powell, right? It's going to be the Powell presser. J-Pow, 2 p.m. Leave it right there. And your daily trigger is currently at 429. Whoop. And this is going to march down to right here by next week. So this is your daily trigger, right? It's currently sitting right here. It's your daily trigger. It's going to march down as we come into Wednesday. It's your monthly trigger right here. Yeah, we're probably going to ping pong this. Hold on a second here. I'm getting some wonkiness here trying to chart this stuff out. Right there.
Looking now to the early
Sell that hour, sell that hour. Slam, slam. Down to that hourly trigger. Slam that hourly, slam that hourly. And only if we get good reports are you going to begin to, only if you can get above this stuff right here, you're going to even consider that trade right there. Only if you can get above this 4 off that right above that 414, 415, unless you can get above that 415 to trade that 420. The expectation down here, the expectation into this is more, let me turn that yellow. Yep, and there's that squeeze up higher, 430. And then your bloodbath right there. -minute, 1 hour. That's right there. There it is, right up there. Right up in there. And there's where your pin is right there. Move that over on an hourly basis. Roll to the upside right there. I don't even think you get that. I think it's right there. Squeeze this up, sell it back down, wait for the thing, the drop, and then the decision right there. So expectations into next week. Expectations into Monday. Upside target, 415.71. More than likely 414 on Monday open, and then a pullback down here to find out if we can go back up and try to trade this. And we're likely going to trade this 414 into Wednesday for the decision. If we get a good decision, upside expectations going to be 420, 421. Downside expectations on a hawkish Fed, it's going to be messy. You're talking about, hold on here. In expectation of a downside move to 4,000 right here. 4,000. If you get bearish JPOW, you will likely see a bloodbath down to test that 4,000 level. So downside target 4,000 on bearish JPOW on Wednesday. Upside target on bullish JPOW 421 on Wednesday. I fully expect us to trade up into dealers to help you over the weekend, get up here, and then possibly a pullback to retest this prior low back here on Monday. But I want to warn you guys. Even with Jerome, right? This trade to the upside does not clear bulls. Let's say you get JPOWs like, yeah, we're not bullet, we're not bearish, we're not hawkish. You get that squeeze up here, just another excuse to go to the downside. You have to be above that 421 to even consider being out of the red. And even then, your weekly trigger is at 430.58. You need to be above this as well. Excuse me. This will be up here. This will be at 428 here. You need to be above 430 to even get out of this mess. If you're a bull, you need to be above 428, 430. You have a lot of work up here if you're a bull. Whole ton of work if you're a bull. This is a disaster for bulls. Bulls need to be above the hourly, above the daily, above the weekly, then shit tons of consolidation to get the daily up here, get the hourly to race up to even consider correction to be over, doom over for bears or for bulls. This is very bad, man. Like this kind of stuff here, when you look at that trigger screen right there, this cross is not good. So I guess maybe you'll get your Black Monday this Monday, right? That's what you're probably thinking. Black Monday this Monday because of that cross. So I guess you didn't get your Black Monday last Monday. Maybe you'll get it this Monday for that 4050. But for next week, I'm telling you guys, if you are a, why is that still up here? Why is my camera not up? If you are a, hold on, break time, be right back. If you are a bull, right? There is no like long-term, oh my, like we're bullish trade for you unless price gets above the weekly, the daily, and it's reordered like that. Price, hourly, daily, weekly. Until you get that, there is high risk in this market. And any downside moves will be preceded by squeezes to the upside again. So I guess the only thing I can leave you with would be risk adversive. If you are not risk adversive and it does bloodbath on you, that there should be a squeeze up to the upside at whatever point that is. If you see like a bloodbath into Monday, it should squeeze straight back up into that daily trigger, and you should be given an exit out of the market at some point. And sellers are gonna use that daily trigger to their advantage over this weekend into Jerome Powell's speech next week to try to force that daily trigger down through that monthly trigger. So be very careful in the next into the next week. The next, I want to say the next 3 sessions, Monday, Tuesday, Wednesday, by 3 p.m., you're going to find out if this market is going to go down in flames. So today's Friday, right? Friday, Saturday, Sunday, Monday, Tuesday, Wednesday. By Wednesday, you have a high probability of finding out how fucked this market is going to be, how much panic jumps into this market, how much scared traders, scared investors, and how bad does it actually get? The setup is there, though. The setup is there for bears to destroy this market. Not correction, but to destroy it into the end of the year. So we'll be paying close attention next week into that report on Wednesday from the Fed. I am getting more hawkish on the Fed heading into Wednesday. I just read an article from CNBC that said, don't expect the Fed to be hawkish. I am on the other side of this. I think I'm not on the side of doom and gloom from the hawkish Fed. I think the Fed is going to get more hawkish. Does that imply that the market's going to get on a ball of flames? Not necessarily. But it does imply, for me at least, that he's going to say higher for longer and emphasize it even more on Wednesday. So I'm not looking good. It's not looking good from my perspective from Jerome Powell. Since I hate puts, yeah, the idea here is that I want to sell the daily trigger. That's what I want to sell. That's all I want to sell, daily trigger. I've got no interest in selling anything but that daily trigger. Zero. No interest in selling anything but the daily trigger. That's it. Only thing I'm trying to sell here is daily trigger. Not trying to sell any inter-day trade and stuff. Just daily trigger. That's it. I've been there. I've lost 6 figures trying this. I've tried to buy puts. I've gotten smoked for 6 figures multiple times. We wake up Monday morning and we're trading that daily trigger, and you disappear and I don't. I'm the one that has to eat that shit. So I end up eating. If you've never lost 6 figures, you don't understand what that's like. If you haven't, if you've ever lost it in one go, if you've ever gotten squeezed out, if you've ever gotten a real true margin call, you don't ever want to experience that. So am I buying puts here? Fuck no. I know that we can wake up Monday morning at 4:30. I know that we can. And if we wake up at 5:30, or we wake up at Monday morning at fucking 4:30, I'm going to get squeezed out. So absolutely not. Patience. Don't care about blood. Don't care about the weekend doom. Don't care about Monday open. Only thing that I care about is selling that daily trigger. That's it. Sell the daily trigger. It's all that matters. I got to say it. Sell the daily trigger. That's what matters. It is most important, regardless of price, I assure you. So that's all I've got for you until next week. You guys had me chart out most tickers that are reporting that are major next week. There's a few that I didn't do. You've got my expectations into the weekend. You're going to have dealers buy this market over the weekend
Looking again
into
to the
about
market option,
6
balance still at
a.m. on Monday, and then they're going to try to
655
sell it on you once the cash market begins. New York opens at 4 a.m. By like 4 a.m., 6 a.m., they'll try to start selling it on you again. But for next week, that's what I got for you. Look for that daily trigger. Whenever that squeeze happens on that daily trigger, it's going to get nasty. You're going to see like that squeeze is the one to sell. I don't care. We could go down to fucking 1,000 today, and I wouldn't give a flying fuck because I fucking traded COVID down. And dude, you buy $25 puts and they go to fucking zero. Fuck that shit. I've been there. No way, no how. Been there. Don't want to do it. Don't believe it. Never will. And I'll lose more money trying to slap down market crash puts or market crash shorts in the wrong place, the wrong time. This is not the place to be doing it. That's all I got for you. I think that's it for today. I think I got it all out of the way. 3:41. So we're going to spend the last 20 minutes. You guys got the charts for next week, what to expect. I'm going to crack a beer with you right now, and we're going to give some thanks out there to anyone that supported or joined the show and stuff. So hold on a second here. Happy Friday, baby. We got a big weekend coming up here. I got a bunch of crap going on this weekend, so I'm kind of stoked. So we're going to talk about what? Anyone that's helped support the channel this week. Memberships, Cash Burn 420. Thank you for subscribing via Prime. If you don't already know, you can chat on this program in the chats for free by going through Amazon Prime Gaming to chat in our stream. If you don't want to pay to chat here, there is a free option. Amazon Prime Gaming. So Cash Burn 420. Thank you very much. One Share Shah has subscribed tier 1. Thank you very much. Ram Husk. Thank you very much for subscribing. Who else we got here? Kamal, thank you very much for becoming a member. Hector, subscribed via Prime. To the Point, became a member. What else we got here? Recurring memberships. Recurring. It's Fitzy, baby. What's up, brother? I want to say thank you very much for resubscribing. Trader Podcast, resubscribed for 4 months, baby. Johnny on the Spot, 42069, resubscribed. Scotty H44, resubscribed. Bebop Beats, resubscribed. Smiley 5228, thank you very much, brother. And he said, good morning, all. Full-time students, resubscribed tier 1 for 3 months. Turkey McNugget, Steve Austin Millie, Spaceman 003, Greenman 1984, G-Dad Gold, baby. Diebang 81, resubscribed. Legend 20X22X, Legacy, resubscribed. Mike Asian, Carrot 91, Ramblin' Gambler, Goatboy 1989, Crazy 80 Corp Squad, Lightbringer 11, Bumbledine, and my wife is healthy. Thank you very much. What else we got here? STT Voyager just dropped in and said, love you, Cap, and the people here donated $20 just now. STT Voyager, what's your favorite stock to have charted, brother? We'll chart it out right now for you. Next one we got here. Let's do some special thanks. We're going to do special thanks to Discord. We're going to do special thanks to Discord for everything that they... Dude, what is going on here? Why am I having problems with Discords, too? I had problems all over the place. I want to give a special thanks to all the moderators and administrators on Discord. Binky GTT, Blind Nest Owl. Who else do I got out there? I've got John L. I've got Rob SFO. I've got David AMS, core group of people. Career Low, special thanks to you as well. And then Sam, if you're out there, special thanks to you. Joe Donut, Quinn, special thanks to you guys.
Still sitting at 635 million to the sell side.
Woo. Trying to get through all these names, like a ton of names here. Hold on one second here. I was going to go through all the YouTube moderators, but I forget. There's like 30 of them. Hold on one second. I want to get out all the moderators from YouTube really quick.
Get a free trial at tickstrike.com.
I don't know if I can find them right where I'm at. Where's community? Dashboard, comments, copyright, customization, settings. I want to also say thank you to moderators on YouTube. David AMS, Super Newbie, Garrett Capshaw, Miro, Jafar, John H. Blissowitz, Stacy F., Fama, Blanca Baby, DJ 2112, Super Bull Old Man, Captain Ron, Blind Nestal, Purple Tom, Bazra, Erms, Jason H., Brian H. Baby, Betty Mac, Josh Career Low, Jared Rumbald, Chaz Joe, Streamlabs, Harushi, Jimmy Barry, Binky G, Rowit, Don Robo Crip, and Andy Nelson, STT Voyager, Z Holy Croissant, Will M, Sparky, Bob Ross, Talking Monkey, and firsthand the legend John H. Let's see here. Oh, I forgot E-Trading Shorts inside Discord too. I got to thank his ass as well. What else do we got here? I think that's it. Dude, I got a copyright claim? You got to be shitting me. When the hell did that copyright claim come in? Dude, if I play any kind of music from the Fed Speaks, they nail me. I gotta mute the Fed speaker or the Fed music this week. Some blood here into the close, back pinning onto that monthly trigger here into this close right now. Trying to pin this market directly into the close. So no joy, no squeeze up into the close here today, just pinning action right now. I don't know what I'll say to you guys. Let's have a beer, dude. Let's chill. Tell me what you're going to wear for a costume this weekend. Are none of you guys dressing up for Halloween? Monthly trigger that was less supportive. It's completely supportive. I'm in disagreement with that. You guys are trading 1 minute triggers here. I got a shit ton of calls here. Oh, Joe, I got $15,000 in call spreads here, Joe. Don't scare me, man. Don't freak me out, brother. You guys are role playing? Well, here we go. Hold on 1 second here. Since you hate puts, are you going to buy puts or stonks like Esto? Nope, no Esto for me. Merritt, let's do something here. Let's hold on. Let me see if I can check something here. Hold on. Let me know in the chat right now. Are you short into this weekend? Are you long puts or short or long Esto or long puts? Let me ask you guys a question here. Let's get people on record here. Hold on a second. I'm reading some of the comments here. Give me a second here. Hold on a second here. I got to get people on record. I'm reading some of the comments here. Last part of train bar. Joe Donut, are you short into the weekend?
So looking now to the market on close imbalance.
Joe Donut, are you short over the weekend?
Just waiting for the final orders.
Joe, I'm going to call you right now if you don't answer.
Market on close imbalance again, 325 million to sell.
Hold on here.
Last time this week, that's the market on close imbalance.
We're gonna
25 million to the sell side.
Trying to read some of these comments here. No, I want your positioning. I want to know what your positioning is. Give me your actual position right now. Hey, are you short along the market over the weekend? Are you? So you're not in anything, right? Okay, thanks. I gotta go. Okay, so Joe Donut says that he's not on anything over the weekend. So I had to check with him. Let me read the other comment. Let me go to YouTube comments. Matt Quell is saying long IWM with. Oh, let's scroll up, see what you guys are saying here. Chase Winter. Chase, are you long or short into the weekend? Chase Winter, are you long or short over the weekend? I want to run up. I'm going to go be Scream guy from the movie Scream. That's awesome. I like that, Rohit. Blonde Bimbo, I like that too. That's hilarious. TGT. I'll do that one right now. Waiting, long IWM with prayers, long the Qs, flat, risk reward for short right here is no good. Monday puts for bad war news. James, your short weekend. Dressed up as a grocery store receipt. Long oil is Matt Quella. Matt saying long oil. Flat on Binky. So lots of talk, but not lots of people holding over the weekend. James Valdez. James Valdez, right on, brother. Hold on, he's long puts. James Valdez is short. I think I already got him. You are short. So Chase is short over the weekend. Closed shorts, but long VIX crash calls for our data. Closed the S puts yesterday, flat for the weekend. Love you too, Stacey. Have a great weekend. No, you said you're short. I don't believe you at all. Who else? I gotta go back to Twitch and see what they're saying they are. See what's going on here. Let me see what's long theta sideways on rally with you. Long everything with time. Long over the weekend and short long term. I'm in cash this week. Yeah, Joey Donut just said cash this weekend. I'm short Amazon calls, long SPY calls. I like that. I like that trade. Who's that? Ant8084. Good job. Sam is in the house. He said long. I've been max long just 2 days early, eating massive shit. I'm long, so you guys know that I'm long. I'm long call spreads right now. I'm going to hold them to 430, 440. Balls deep long. Who is that? Sam? Long again. I've been max long just 2 days early. Flat for the weekend. Planning on shopping spree next week. I'm in cash too. Yeah, Bumbledine has the right idea here. If you get the good news on the Wednesday dovish Fed speaker that or Jerome Powell, then you end up getting that beautiful dip buy. I'm in cash too as Duke. Balls deep long. What else we got here? Let me read what some of you got. I'm trying. You guys are blazing me up here. It's good. Keep posting. You're going as a rapper, right on, Stacy. You're going as Run DMC, right? Swing along until ES gave long. For sure, don't be short here. But so Chase, I don't believe you. You're short. You'll come back after the squeeze and say that you were closed everything. I already know. What else we got here? Ooh, Luffy from One Piece. Right on, Taco Boy. Dude, Luffy from One Piece. Right on. So Luffy from One Piece is a good costume. You know, am I the only one going out this weekend? I gotta be the only person going out. Let's see here. Been buying 130 QQQ puts, January expiry for 6 months now. Ken B, baby. Fucking short. Not short, but long puts. Right on, brother. Ken B is like, I am fucking full bear right now. You going out on Saturday, Joey? What are you going to dress up for as, Joey? I got plans. Joe, dude, I got to talk to you. We got I sponsored a fighter for the website, man. You going deer hunting? Right on, right on. You got deer hunting. What else you got going on here? 30-minute chart. I'm going to go back to a 1-minute chart. You guys want to see 1-minute chart instead? And there's 1-minute chart right there. Oh, you're giving blood for the Halloween drive at the local elementary school. Right on, right on. That's a good one. I like that. I like the donating blood. I can't do that anymore because of the vaccinations I had in the Army. I test positive for something that I don't actually have because of well, you did close, Chase. You are long call spreads. I'm fascinated to find out who's long and short here. There's a contention of bearishness here. I don't know if we can crash over the weekend. There's a possibility of it. It's about 15% chance of a crash over the weekend. 15% of a crash. There is a higher probability of hitting that 405 into Monday open on SPX. There's a higher probability of that, like 30%. But I'll tell you what, man, that fucking daily trigger is the sell. Guaranteed. That daily or weekly trigger is the sell. If you're looking for that next sell, that's where it's at. That's like the place to sell. So I don't think that it's here. I think that you've got a high probability of squeezing up into the Jerome Powell speech, believe it or not. Like squeeze that whole week up into it. Oh, TGT, let's do that one really quick because I promised that 2 days ago. All right, TGT. Oof. I kind of like it, dude. Let me look. Hold on. It's being accumulated, I can tell you that. TGT is definitely being accumulated. I like the stock. I like TGT a lot. You see this down here? Who was asking for that? Shit, now you get me to want to buy TGT. Who asked for TGT? He's asked for it a few times. To the point, asked for it. Can I make him a moderator? I like the stuff that he puts. Can I add him as not a moderator? Standard moderator. I like him a lot. Boom. To the point is now a standard moderator. So to the point. I want you to see this here. This is absolutely beautiful right here. Hand grenades and horseshoes. This is your time to shine. If you get any chance to buy $78, you buy it. Any chance at all to buy 78 on TGT, you buy it. You buy it, you buy it, you buy it. This is 2018, 2020 low. Trading 107, 102. I'm bullish from here. You might get one last capitulation down here. DCA $78. This buy right here is valid. That buy right there is valid. This DCA is valid, and it's possible you could get 80 it's possible you could get 80 down here. You could see a low of 80, but it doesn't matter. All this is going to get accumulated. I'm extremely bullish on TGT. When is their earnings? 15th of November. Yeah. I'm very bullish on Target here. I would keep an eye on Target into this into Wednesday here. This is all buy right here. I'll buy this with you, man. I'm down for this. This looks like noise to me. Target is a buy. Yeah, even with this daily resistance right here, this is accumulation. Or you're coming into accumulation now. I like TGT here. Good. I'm bullish if you want to know. I'm bullish on TGT, brother. Very bullish on TGT right now. It's probably as good as the TGT is probably as good as what was my favorite pick for this week? My favorite pick this week was SQ, but I like the trade on TGT. I'm gonna have to buy that, by the way. That on a 5-minute chart here. All right, 4:03 in the afternoon. I'll catch you guys on Monday in the morning, 9:30 in the morning. I do want to let you know that next week, on Monday and Tuesday, there may be some times early in the week where I cannot be here. I have Halloween stuff for my children I have to do over Monday and Tuesday. They have holidays where I don't, but I do have to spend time with them getting them ready. So mostly on Tuesday, but Monday, Tuesday, there may be some times where I am required to be with my kids. Otherwise, I want you to have a wonderful weekend. I'll catch all of you on Monday, 9:30 in the morning. You have everything charted out for next week for all of the reports. We have 30% of the S&P 500 reporting next week. You have extreme feelings of bearishness into Monday. You have extreme feelings of crash coming over the weekend. You've got extreme feelings again, or I guess you don't have extreme feelings on Jerome. CNBC is telling you, don't worry, you're going to get good. You're going to get dovish Jerome on Wednesday. I'm in a disagreement with that. I think you're going to get hawkish Jerome and an expansion of his last talk at his last rate decision. Catch you all Monday, 9:30 in the morning, baby. I'll see you guys.